All right. I think I'm live. Let me just line this up. Let's wait for YouTube to send me my notification. I'm going to assume I'm live. No confirmation yet. The live timer just reset. Maybe some of you can tell me out there if I'm YouTube just told me I'm live. Good, I'm live. Great. Let's begin. What a week, right? What a week. And looking at the market tonight, doesn't look good, but you can't tell much from futures anymore. There used to be a time when you could. Now it's you got to wait till the morning. Let me see if I can get the right height on this. There we go. Okay. Excuse my voice tonight. I just finished a long session, so I'm a little throaty. Let me just mute this for a second. All right. I may have to do that a couple of times. Explain how interest rate swaps work and how they price in rate cuts. Well, that doesn't lend itself well to a verbal answer. Usually you got to draw something out. If you ask that question under the last market outlook, I do a Q&A answer video every Wednesday. I can answer it there. Current Middle East conflict. Do you think Oxy is good to sell a put on? Well, I have. So being that I have, I must think it is, right? Was surprised to see copper price up to 413. Yeah, little movement upwards in FCX. FCX is a stock that is part of the S&P 500. So S&P 500 was weak. Give me a second. S&P 500 was weak, so you have a lot of passive holding. So it was probably being sold passively. So it probably didn't have the correlation to copper prices that it should have because the index was weak. SPY was weak. It's a member of the index. It would have been sold off with the rest of the stock. Why is it that Friday, when the market was going down, and if there were fears of recession, the DHI held and housing stocks didn't lose much? Trying to find a reason for every move and every counter move, I think, is futile. What you can do is just say that there probably was more favor for housing stocks than there was for the market. Why? I don't know. Again, trying to find a reason for every single move. Sometimes there are no reasons. Sometimes it's just randomness. Sometimes, you have a buyer that's saying, well, we want out of this, but this sector looks nice. Let's get into this. So it might tend to hold up better than the rest. But I don't know that you're going to find a cause and effect behind every price move. There is a certain amount of randomness to day-to-day price moves. That trying to attribute a reason to every move, I don't know that that's very useful. Lamb Weston, are you going to wait until it goes to 65? I would be an owner at these prices had I not sold puts and I saw Lamb Weston in the mid 50s. I would have stepped in. I would have been an owner at these prices anyway. So yeah, I'm going to hold it. Is it possible for you to do a short tutorial? Sorry, my neck is a short tutorial on repeat economic data impacting the markets like Friday. I mean, how would I have known what would have happened Friday? So I don't know that I could do a short video on that unless I expected the exact same things to repeat. I mean, how would you know? There are hundreds of economic reports. Most of the time, most of them mean nothing, but sometimes one of them means a lot, and sometimes it comes out of nowhere. It would be hard to to cover everything. Here's the thing: you're never going to know it all. No matter what I do, no matter what you do, you're never going to know it all. There'll always be something new around the corner where you go, well, what's this now? Nobody told me to watch this. This is something new. And it's only years of experience that teach you, what's important and, what are one-off events. But there's never going to be some manual, if this, then this, if that, then this, aha, I should do this. You're never going to have anything like that. And, from week to week, there'll be a new thing. And you'll say, well, I never knew I had to look at this or look at that. Well, because for the last 19 years, it didn't matter. Now it does. Maybe there was something for the last 15 years, it didn't matter. Now it does. So it's a matter of rolling with the punches, being resilient and saying, well, as long as I follow my rules for portfolio construction, none of these things should bother me. In case of a synthetic long or short, if a company ETF pays dividends, are you entitled to these? No, you're not. Options are not entitled to it, but options are priced with the dividend yield in it. So if you create a synthetic, you will have within the price the interest rate, which will make the cost higher, less the dividend, and it'll be the continuously compounded interest rate minus the continuously compounded dividend yield. So it's in the present value of the continuously compounded dividend yield is in the price of the synthetic. In case of TLT, would you rather sell a put on a monthly basis until January 2026, for instance, or simply do one synthetic long with a maturity of January 2026? The forward price is too high for me to be interested in doing a synthetic. If I were going to do something to January 2026, I would simply just sell the put at whatever strike price I thought it would get to. I wouldn't worry about buying the call. You can sell an in-the-money put and get a delta high enough. You do have assignment risk along the way, but I would much rather do that than do a synthetic. When you are selling puts, what percentage of your cash balance are you comfortable using for margin? I've never ever gotten close to ever having a problem with that. I don't really have to think about the capital I have. It's significant, so it doesn't really affect me. Now, if interest rates were super low, I'd be more fully invested. Then I would care a little bit more. But it would be such that, I'd be careful in, I would assume a 100% assignment rate and make sure that I had the resources to handle that, or that I had a strategy that if it was 100% assignment rate, how would I get around it? For example, let's say I get assigned 1,000 shares of something, and I don't have the capital for 1,000 shares of something. I'll still get assigned, and I'll have a negative cash position. I'll be using some of my broker's money to get that done. What I would do the next day, if I still wanted exposure to those 1,000 shares, is I would turn it into a synthetic. Then I would need significantly less capital, and I wouldn't need my broker's money for that by using options. And with a synthetic, I get a delta of 1, same as the underlying. If I didn't want them assigned to me, I would have been aware of that before assignment or before options expiration. I would have managed my rollover. So I would have been looking to roll the options forward, maybe even roll them forward and maybe down. If I had to pick up a premium, I would have been doing something to manage that risk. Where are we here? Is there any video in the applied series that covers how you view skew and IBKR you showed today for GM strips? Yeah, when in the applied options, I use IBKR a lot, and I introduce a lot of those features throughout the options module. on how to use those features of IB or use those particular tools in IB. Any thoughts on Eco Petrol pulling out of Oxy Crown Rock deal? Well, my understanding is that the president of the country is heavy on a green mission and is not really approving anything new in that respect. I don't know, it's just, you don't want to see, a partner pull out of a deal, especially for a significant sum. But this is part of having good management, right? You're betting on a company that has a good enough management in place that can deal with that and roll with that. And, so it's a matter of, well, how do they respond to it? Is it just something that happens to them? Or is this something where they say, okay, well, what's our backup plan? What do we do? I can only assume that there must have been some plan B thinking, considering the country's leadership stance on fossil fuels. That they must have been looking at this saying, well, listen, what if this doesn't work? What's our backup plan? That they must have had some backup plan in place. This might have been unfortunate, but I don't know that in hearing that they did that they would think, oh, well, this was unexpected. I'm sure that there was some probability of this happening. Thoughts on Berkshire selling half its position in Apple and also selling Bank of America? Hard to know what the thought pattern is there, but I'm sure that both of them have added significant value. And, if you have a soft economy coming up, Apple, as good as it is, Apple is going to hurt. Apple is going to suffer. And this is typically what you do. As your position increases in value, you start to lighten up along the way, because you have to think about, well, I'm here now. How much further can it go? And that's the game. Is there something else that has better value? So selling something doesn't necessarily mean you think there's no higher it can go. It could simply mean the extra distance it goes may not justify tying up that capital. Maybe there's something that they're thinking about doing. It's not as if they had to unlock it for more money. So, but typically as a stock goes up, unless you plan to own it forever, you do take positions off the table as it increases in value. If I was in my mid-20s, current market conditions, how would you asset allocate to capitalize on the next 5-10 years? I'd buy the market. I'd simply own. Well, maybe I wouldn't buy the market. I'd find sectors that I think would outperform, that would do well over the next 5 years, and I would own them. I wouldn't try getting cute. I wouldn't try trading the market and trying to double my money in the next 6 months. I wouldn't get cute. I would just think, as the market pulls back, I'll continue to add to a position until I'm fully invested. Markets have a bias to only go up. Indexes rebalance. Losers are kicked out. Winners are brought in. So indexes over time tend to just appreciate because you don't suffer the losers. They get kicked out. I would just get exposure to beta, and then focus on what generated the cash flow that got me that money in the first place. How much would you hold in cash? At 25, I don't know, 6 months expense. You're not looking at cash. I think you'd be looking at cash at 25 as a security device, as opposed to a tactical allocation. If you have a job and you have cash flow, you might not need a cash position. If you're not relying on the portfolio for withdrawals or for disbursements, you probably don't need a cash position, right? What index would you or would you pick individual stocks? No, at 25, I don't think that I would pick individual stocks. I think I would want a portfolio until I got more experience with the market. I'd want a portfolio. So an index like SPY or QQQ. Average price paid for KMP, high 16s average price. Would you be adding to it, and at what price? Any weakness? I see weakness. It's where are we? 18 in the 18s. I don't know. It depends on what gets it there. I expected more performance out of the Canadian REITs last week, especially with U.S. rates dropping the way they did. It's going to have a contagion effect in Canada. I thought for sure we'd get something, but instead they were weak. They didn't respond the way I would have liked them to, and it was like, well, okay, so we got earnings coming up. Maybe there's not a lot of movement in front of earnings. Maybe there's a concern for that. Okay, Canada is a smaller market. Okay, so whatever the case, I was expecting more strength. On weakness, it would have to be weakness. But KMP doesn't report till the week after, right? So next week we get Interrent, Minto, and Capri. It depends on how they perform, or better yet, how the market treats them based on how they perform. If they perform well and the market treats them like dirt and sells them off, then I'll wait for KMP to be scolded by the market as well, and then I'll buy it then. But for now, I'd want more of a pullback. I'm not that interested in buying things at fair value. I'd rather steal them. I'd rather get them really cheap if I can. So I tend to have a problem there, is that I don't buy as aggressively as I should on smaller pullbacks, because I keep thinking I want the big pullback. I'll wait for that. Do you see your conviction on GM changing with the deteriorating economy? Well, in a deteriorating economy, everything goes down. So it's not as if, I don't want to be in GM, it's going to go down. Where do you want to be? I don't know. Everything's going down. It's massively undervalued. Yeah, you have a deteriorating economy. Where are you going to go? You're going to have to go somewhere. Bear markets don't really last that long anyways. And GM has already blatantly said, we will buy back shares. So that would be my motivation for going in. So no, I don't think that my conviction would change with a deteriorating economy, because relative to everything else, it would hold its own place. On an absolute basis, everything would begin to suck, right? But I'm not owning it for the next. I wouldn't want to own it. I'm not saying that I want it for the next 3 months or the next 6 months, but I think it's something that I could own over a long period of time. CFO bought more shares in the Form 4s. Where do you see that free cash flow is large for GM? You have to listen to the conference call. Look at their cash flow from operations and strip out their CapEx. A little bit more than that, but as a general rule, you can take their CFO minus their CapEx, and you just listen to their conference call. They'll tell you what their free cash flow is. Or on their investor presentation slides, they'll present it to you. In the 10Ks or 10Qs, you got to calculate it yourself. But in the presentation, they'll give it to you. Does GM's debt concern you? No, because its cash doesn't concern me, right? Look at its net debt. So it has a bunch of cash and it has debt. Take the net debt. Debt that concerns me is debt that's 70%, 80% of the capital structure. That's not GM. So no, their debt doesn't concern me. Asset-heavy companies will generally have debt in their capital structure, as they should, because it does increase the value of the organization by putting some financial leverage in there. For your strips trade, when do you prefer to do the strips compared to selling more puts as it goes down like you did for Capri? Don't you get more premium and control? Okay, I can't unwrap that. I think what you're saying is like, when are you preferring to do strips? Well, heightened volatility I would do, and when the market is going down. I don't know where it's going to end. So doing strips allows me to layer on another strip at, I don't have to layer it on top. Let's say you do 100, 95, 90, 85, 80, and the market goes down. The next strip you layer on could be, instead of starting at 100, it might be 90, 85, 80, 75, 70. It sort of gives you a moving average as opposed to a one strike where the price, if you sell at 100 and the price is coming down, there's really nothing you could do about that other than sell puts below. Doing it this way, I have to, I'm looking at the furthest strike. I don't see any of these getting to the furthest strike. So that is almost like a gift for me. And if implied volatility increases more, then I'll do more. I have the cash. I'm far from fully invested because cash pays 5.5%. When you have a market trading at 21, 22 times forward earnings, it's just hard to go into that market when you're getting 5.5% on a daily basis. Like, you're getting your interest, because it's cash. It's every day you can sell your T-bills. There's no duration risk in them. So you're basically earning it every day. Hard to give that up. But if money market securities, if T-bills only paid 0.25%, it's hard to take it. You'd be like, well, I'm willing to take a lot more equity risk if that's all I'm going to get. But at 5.5%, I'm kind of good on this. So I got a lot of cash that I'm sitting on right now. Any exogenous shock comes to your mind if you were to look at recent events that has taken place? Exogenous shocks are random and unpredictable. They can come from anywhere. So we do have some known events that are going on, but everyone knows they're going on, which means they're more than likely in the price of something, or the risk of their escalation is in the price of something. For like something that would happen out of nowhere, I don't know. You could go through 100 different things. Well, this could happen, that could happen. It could be this, it could be that. The end is, well, what would be the point of doing that? You can't predict them. They're random and unpredictable by nature. So you're just wasting your time trying to figure out what it could be. 20, pursuing CFA level 2, FRM 1. People from top uni are getting hard to be placed. What is your outlook for the job market? I am far removed from the job market. I can't tell you anything about it. I have no idea if it's easy to get a job, hard to get a job, lots of jobs, few jobs, what jobs pay. I am far removed from that. I've never actually had a real job in my life. So I honestly can't speak to that. Your utilities video, you explain that part of the reason XLE and XLU are not highly correlated is because of the price of energy is a pass-through expense for utilities. So the ... and have rate cut headwinds on the horizon. I think you missed the middle part of that. Well, the higher energy costs don't benefit utilities because it's a pass-through. If they pay more, they just pass it through. There's no markup on the energy. It's on the distribution of it or the generation of it. And their return is based on their asset level, not the price of energy. Now, mind you, if the price of energy goes up, the price of your bill goes up, but that's not the utilities money. It's just a pass through. So unfortunately, you went ... and then that was the end of it. The next part says, so if I read it, it says the price of energy is a pass through expense for utilities, so that and have rate cut headwinds. You're missing one part of it, so I don't know what you're getting at there. Intel and semiconductors applied video and how they cover several parts of it. What are your thoughts on Intel now that they're same price 27 years ago? Yeah, that was not good. Intel attempted to adopt a foundry model in which, I mean, they always were a designer and a fab at the same time, whereas something like A&D is a designer and sends it out for fab. Same with NVIDIA. They design chips and then they send it out for fabrication. Intel had both, and they were trying to turn their foundry business into a third-party foundry business where they would bring in clients. That obviously isn't going well for them at the same time that their CPU business is not going well either. Apple abandoned it quite some time ago with the M3. AMD's making more and more inroads all the time. You know, it just could be, I don't know that your next question asked, I was thinking about management. I don't know that it's a management issue as much as a product lineup issue. Pat was hired to turn around the company. Doesn't look like he can deliver on promises. Do you think there's a management issue, just a turnaround that'll take a long time to work out? I'm not close enough to Intel to really know. I don't know that this is a CPU era as much as it's a GPU era. I guess step one, sell your foundry. Right? Get rid of that part of the business. Sell your foundry. You don't need it. But again, I'm not that close to Intel to really make a really good decision about it or a really good assessment. Is the first half recession the same as the slowdown to contraction phase? Probably a big overlap with it. When did we enter the slowdown phase? And have we entered a recession? That's a good question. It might be easier to answer that on a sector by sector basis as opposed to an economy-wide basis. If we look at GDP, it's like, well, we did first 2 quarters of 2023, and then that was it. Off to the races after that. So it's been 4 quarters now of fairly decent growth other than Q1 this year. Are you planning on keeping your house in Canada? At this point, yeah. How much of CFA content should a candidate have covered by now for the November 24 exam? Where are we? August, September, October, November. August, September, October. 50%. 50% at least. Thoughts on Nike stock price after the huge drop? I have been watching Nike. It kind of is holding its own ground where it is. I was thinking any lower and I might be interested in it, but kind of going sideways, which probably makes it a good candidate for put selling. But I just think there are easier fights to win right now. I don't really have to look hard to find something good. I don't really have to go digging over that rock for it. Market thinks we'll have 5 rate cuts. So if as far as Fed fund futures go, sure. Wouldn't it make sense to buy more TLT? Well, only if you think there'll be 6 or 7. It should be priced in at negative 16.5 times 125 times 93. Which shows 112. Duration times change in yields. And percentage change. 16.5 times 0.0125. 18. Yeah. Okay, I see where you're going with that. Be careful here. You are taking the Fed funds futures, which is the target rate, and you're assuming that you're going to get the same rate change, 125 basis points on the 20 to 30 year. You'll notice that the 30-year Treasury last week did not drop, and the 20-year, the 20-year dropped by 34 basis points. Okay, they both dropped by 34 basis points, whereas the 2-year dropped by 48, the 3-year dropped by 50. If you get 125 basis points on the short end of the curve, I'd be surprised if you got half of that on the 30-year, half. So rather than using the 125, I'd be more apt to use 50 to 60. If you're using 60, that's a 10% change, 93 plus 930, 102. We're at 98. And that's assuming that the Fed agrees with the market, which I don't think it does today agree with the market. Maybe it will, but today it does not agree with the market. So I would seem to think 112. I wouldn't expect 112. Yeah. It's the pass through you get from the short end to the long end. I don't think it's 1 for 1. That's not that I don't think it's not going to be 1 for 1. Mention is overdone. I want to sell calls at 101, so I'd like your reasoning for that since it's not fully priced in. If you got 125 and you got 50% pass through and you got 60 on the long end of the curve in total, it would put it at 102. Selling 101s, if you're getting like $1.50 for that, I think yeah, that's if you get that. There's a big difference between the market saying we think this is going to happen and the Fed agreeing with them, because in the end, it's not the market that cuts rates, it's the Fed that cuts rates. So if the Fed comes out and says, well, what are you kidding? We're still adding jobs. Inflation is not at 2%. Last I checked, it wasn't at 2%. Q2 GDP is 2.8%. That's well above growth trend. What are you guys complaining about? What are you guys complaining about? Just because your little stock prices are going down? What, it's only at 20.6 times forward earnings and not 22? You want me to step it? I can hear them saying, we're not here for the Wall Street. We're not here for the stock market. We're here for our mandate. So I think they would have to be really pushed to do 50 in September. I still think 3 is the right number. I just, Citi was right the first time they said they'll be doing 2 50s in a row. They were right, and I thought 2 50s in a row, that's not this Fed, and they did. So maybe, but I think what we have going on right now is a big overreaction to the data from an extremely overvalued market, which is well within rationality. It would be rational to reprice the market to 20 times or even 19 times before you can say, look, now we form the basis for another leg up. I think that would be healthy and rational. I think it's an overreaction on the yields at this point in time, given this Fed, unless you are expecting that, no, this will be a hard landing. Maybe. Maybe. But I don't know that I would be betting on that I would be at $98 on TLT saying, okay, we're going even higher by the end of the year. In time, yes, but by the end of the year, I'm looking at them thinking, it's a little overdone, I think. Or if it's not overdone, look, I can't see why you'd want to price in 6 rate cuts this year. So I don't know what would take TLT higher in the short term. Interesting enough, XLU ran up to 75 and immediately gave back to 74. So I could argue that TLT will consolidate in the weekly term. Would you sell calls on XLU or continue to add to synthetics here? Well, I sold puts at 70. I thought of closing the synthetic and moving more puts up to like a 75 or 76, maybe even a 77 for like January, and closing the synthetic. I mean, it's got lots of time value. It's got increased volatility on that call. I'll tell you that. I mean, it is more profitable than it should be right now. So I'm thinking before the volatility drops, why not take advantage of the higher volatility on the put and switch the synthetic to an in the money put? So, you know, I might do that. Tuesday's a big risk day for XLU. I might have an opportunity on Monday. I'm sure there'll be some heightened volatility on those underlyings, and there'll be some heightened volatility on XLU with 16 to 17% reporting the next day. I might do that, but I'm not leaving utilities. In fact, I'm looking for opportunities to be in more. A pullback on XLU, you know, switching out and then getting a pullback on XLU, I think I would welcome that. What price target do you see for CapREIT? CapREIT is not a short-term hold for me. CapREIT, I bought too much. I'll tell you that. It hung around the 43 for too long, so there was a point where I was buying out of just sheer anger. Fine, you don't want it, I'll buy it. Give it to me. You know, so I've got more shares than I want. All my puts expired, giving me money, which is great. But still, 64,000 shares is a little more than I would like to have. I'd like to bring it back down to around 40,000. So I'd be willing to sell calls, you know, on a significant rally. But this will be for me like Northview was. Northview I held, and I kept selling puts. And if it was put to me, whatever was put to me, I'd sell calls higher. And I just kept playing around my core position, but I held a core position. I'll keep holding a core position. Where are we? Mid 48s. I think by end of year, it would be, I think, well within reason to see above 50. 52, 53. With probably maybe $10 more than that, low 60s by the end of the following year. I still think Bank of Canada has 2 more rate cuts in front of it. And I'm just going to continue to hold. I see no reason why I would want to get out, because the options not as liquid as I would like them to be, but they're still fairly easy to get in and out. I can do 100 at a time. With a position that's closer to 40,000, I don't mind selling puts more aggressively. When you have 64, it's like, well, how many more shares do I want if it does go down? Like how invested in this thing do I want? I don't want to own it 100%, right? I mean, I gotta be. Not that I could, but you know, at some point you got to say, look, for me to sell more puts, I really have to lighten up. So if it's going to bounce between 48 and 50 for a while, and I have 64,000 shares, it's hard for me to sell 47 puts in any kind of volume because I already have 64,000 shares. But if I had 40,000 that was going to bounce, I could make a lot more money by selling puts if the shares aren't going to provide me a return. So I would like to lighten up. But lightening up is just changing, you know, getting back to what would be considered a reasonable position. But I have no plans to sell. What price you know, I don't know. You let me see how the market unfolds, and then I'll change. I'll decide on a price then. Investor and trader for the last 10 years in Indian market. live in Belgium. Want to start YouTube channel for investing and trading. Will teach what I know and learn what I don't through the journey. Yeah, that's how you do anything. Look, anything you want to do, you can do. There is no secret to it. You will get better as you do it. Don't worry about being perfect on day one. It's taking action. That's the rare thing. Okay. When you first start, you're not going to have it all. You're going to be nervous. You're going to say things that you don't quite understand. You're going to get into traps. People are going to call you out for things. Some people are going to say this sucks. Some people are going to say this is great. Whatever. As long as you take action, as long as you're taking action every day, you will get better. Yeah, off you go. I think so. GM CFO said on a call they plan to buy back 20-30 million shares in earnings call. They're at least 1.136, so they would still be at 1.1 million if they don't do more than he said they plan to. So they would still be above 1.1 million if they don't do more than he said they plan to. He did say, if you listen closely, he did say that, as long as the share price is not reflecting their true value, they will continue on. I would look for another share buyback. They're not going to get the respect that they deserve. So I think they will keep doing it. What do you think I should do to make it more authentic? Just be you. Just be you. I don't know about, when it says to be authentic, other than just being you and sticking with what you want to do and how you want to do it. I would try to avoid, looking at a bunch of other channels that are successful and copying them or trying to be like them. Trying to be like them, you're not going to be them. It's just going to be obvious you're trying to be like them, and they're already there, right? So be something else. Be yourself. You'll find your style. You'll find your voice as you start, but just start. Why are you still bullish FCX? Given a Trump government, you would still be bullish copper. Do you think that there will be more or fewer electrons in the future moving around? Will there be more housing built? That requires copper. Will more EVs be built around the world? FCX is an American company, but they don't sell an American product. They sell a global product. Will there be more EVs made in the world? Yeah. Will utilities have to expand their assets? Well, do you think that AI is here to stay and AI is a thing? Do you think self-driving cars are here to stay and that we're going to continue with that and that is a thing? Do you think that the grid will have to get smarter? Do you think more things will be digital? Anytime you have digital, you need energy, you need bits and bytes, you need something, you need electrons traveling across copper. It does not matter who the president is. You're not going to stop that. You're not going to stop that at all. So no, it is quite clear. Almost any mining analyst will tell you, while we don't necessarily have a copper shortage today, there are not enough mines in the world to meet the demand for copper over the next 6 years. And the length of time it takes to build out a copper mine, you have to find a significant deposit. You can find resources, but are they reserves? You have to find reserves. Then you have to start building that mine. Then you got to get all of the environmental approvals for it. We're seeing that is getting more and more difficult to do. Panama has already said, no, thank you. They're willing to give up the revenue on the extraction of the mineral for the environment. No, thank you. So you're going to need more copper in the future that simply doesn't exist. Does that mean copper miners are just going to go straight up today? Probably not. But I think that now is a good time to get your position in a good copper miner that gives a dividend, so you get paid to wait. Something that has interesting options on it so that you can always generate a double or triple dividend on top of what you're getting. It's a nice place to sit. I don't want to sell calls on Freeport unless I own Freeport. And I can't sell calls and make extra income unless I own the underlying that already pays me a dividend. And I get the underlying by selling puts to buy them at a lower price when the market is at that time. So I can play any part of the distribution. If you're playing with options and the underlying, you can play any part of the distribution. I don't need a stock to go up to make money on it. In fact, find me a stock that wants to trade in a $3 channel that bounces a lot. So the option premiums are nice, and I will make a lot on that thing. In 2023, I made a lot of money on Oxy without ever owning it, without ever once owning it. You know, tell a straight buy and hold investor that you can make a lot of money, your best performing stock, without ever owning it. Oh, you're just making that up. But because it has options, I don't mind what the stock does. The question is, do I have a long-term belief in it? I do. Freeport's the largest copper miner out there. They are with their gold reserves out of Indonesia, it makes their copper free. I am more than happy to hold on to that. I have no issue with that. And again, nice options, nice premium in the options. So I can take the dividend and I can, over the course of the year, triple it. So give me a stock that has a 2% dividend, I can turn it into an 8% dividend. That's not bad, right? That's not bad. And with the judicious use of buying and selling the options, once I own it, selling calls against it will begin to lower my average price. You take a long-term view of this, I'll do quite well. So I don't need momentum. I don't need something to go to the moon for me to do 20, 30% on. As long as I have an options chain, as long as I have liquidity in there, I'm good. I am good. Please share your experience regarding this do's and don'ts. Do's and don'ts for what? For a channel. Well, I don't really know about the do's and don'ts. Here's a big don't. Don't pander. Don't treat your audience like they're stupid. Like, don't pander. Don't jump on bandwagons to jump on bandwagons. If you have a belief about something, go ahead and speak your belief, and don't change your mind and say different things just because you think your audience wants to hear you say different things. Say what you want to say. Once you start saying, well, what do they want to hear? I'll say anything they want to hear. Then you're more concerned about having an audience as opposed to having something to say. Have something to say. If nobody's interested in what you have to say. But at least you're you. At least you stayed, who you are. I do see some people who have channels that, and not so much in the finance space, but I see this in more of the sociology space, the voices on the left and the voices on the right on YouTube. And I find that many of them, try to figure out, well, what do people want to hear? And I'll tell people what they want to hear. And you listen to me and think, okay, well, I don't know that you have an opinion of your own, because you're really just trying to get the biggest audience you can by saying what you think they want to hear, as opposed to saying what you truly believe and letting the audience say, yeah, okay, I can listen to this person because they help me form my belief system and they help inform me about what I think as well. The reason we listen to other people is not because we want them to give us all their ideas and all their thinking, is because we sometimes think about the world in a certain way, but we may not be able, we may not be very good at expressing ourselves that way, that when we listen to other people, we could say, I that's exactly what I think. And that, there it is. That's how you say it. Okay. Now I know how to express myself that way. We read books, we read literature, which helps us expand our vocabulary. So we then can begin to express more abstract ideas with words, as opposed to saying, well, it's kind of like, well, and if you did, and like, you talk to some people sometimes who are not as well informed as they could be. Doesn't mean that they don't have great ideas in their head. It just means they don't know how to express those ideas. So if you are true to yourself and you're saying something that people like, you'll have an audience of people who like what you have to say. Once you start chasing the audience, now you're pandering. That's easy to spot. That can be insulting. Don't pander is about the only thing I can say. You're going to keep your Ford truck for now due to the insurance ripoff? Do you think GMC has better products than Ford? I've owned GMs in the past, and I've owned Fords. And up until I owned this last Ford, I would have rated them about the same. I had Ford pickup trucks. They were fine. I had an Expedition. It was fine. I didn't have any issues with it. Chrysler, I've had 2 Chryslers as part of a business. Never again. Both of them, it was like, it never ended. Oh, the minivan had, I don't know, 4 or 5 warranty repairs. And I said, at this point, you should just be replacing this van, because as soon as the warranty is up, I'm going to be back. I know I'm going to be back. So I had to sell that piece of shit. But I would never touch Chrysler again. But GM and Ford treated me well. I had a Corvette. It was fine. I had leased a Sunfire for somebody for a period of time. That was fine. I had an Avalanche. Great truck. Had no problem with that. Had that for years. Me and my dog pretty much destroyed the interior of that with his muddy paws over time. It was nice leather interior, not when he got done with it. But I had no problem with that. It's this truck here that I got that it's not really that great. I'm not pleased with it. And I think that Ford has cheapened its product over time to meet its gas mileage, gas mileage targets, by making the truck lighter, by taking things out. Things that seem obvious. It's like, well, okay, well, I'm on the passenger side and my clicker's not working. I'll just use my key. Oh, there's no key entry on the passenger side, because that would add weight to the vehicle. You got to walk around to the driver's side to stick your key in. It's like, it's kind of like a stupid thought. Everything is cheap inside this Ford. Everything is light plastic or aluminum. It's just cheap to keep the box from denting, because it's aluminum. They put a plastic liner in it, that's lighter than just making a steel box. They just cheapened the vehicle. And I'm not a big fan of that. So as for now, I'm going to keep my Ford truck, but the insurance is just pisses me off, because I know what they're doing. They're using what they know about me to set my rates. We know that you live here because we insure your house. We know what that neighborhood is. We know the average price in that neighborhood. We know something about you because you told us through the years. We ask, they ask, do you drink? Do you smoke? What's the highest level of education? Because it all sets your rates. So they know so much about me now that they know, oh, you can afford this. I'm pretty sure the insurance rates they gave me are my insurance rates. I shouldn't even say they're my insurance rates. The insurance rates they're quoting me are my wealth's insurance rates, not my driving experience insurance rates, but my wealth's insurance rates. I've had enough of having to pay other people for my success. I've had enough of that altogether. It's gone too far, that when you begin to use my information against me to charge me more for no other reason than you think I got it, I got a huge problem with that. So I think that's what's going on, because I've asked some other people who have vehicles that are in the $100,000 range, what do you pay for insurance? And I tell them I'm being quoted $3,400. Not one person has said, well, yeah, that sounds about right. It's all like, what? Like, if you're at your age with the way you drive, because I don't go out at night, I don't go to clubs, I don't drink, I don't drive around, I drive maybe 600-700 kilometers a month. To hit me at 3,400 is really just saying, we know you got it. We know you got it. And this much doesn't matter to someone with your wealth. So to you, it's nothing. No, that's not the deal. That's not the deal. You don't get to bill me based on my success. That's what they want to do. I'm telling you, there is a reckoning coming for that. That will be declared illegal. I mean, you have people looking into this. You have the FTC kind of saying, well, there's something going on here. And wait until it happens to when politicians start seeing that it's happening to them, that suddenly they're paying more money than anybody else just because of who they are. They're going to get in on it. That is unfair. It's unfair. Now, listen, you want to charge me more for a red sports car because red sports cars have a statistically higher probability of being in accidents? Okay, I chose the red sports car. That's fine. You want to charge me more because the type of vehicle I drive, with the type of age that I am, with the type of background, has statistically shown that it causes more, that it results in more. Fine, do that. If I'm taking an Uber and it's the busiest time of the day and you want to raise the prices on Uber because it's the busiest time of day, fine, go ahead and do that. I know it's me, them. Everybody's going to have to pay that higher price. But when I get in an Uber and Uber knows that, oh, we know this guy, this guy's got a lot, suddenly I'm paying $18 for a ride that it costs everybody $9 for, that's where I have the problem. That's a wealth tax. That's a wealth tax on me that's not charged by the government. It's still a wealth tax. I already pay wealth taxes to how many people who have to come to the house to do work. I pay a wealth tax. That now you're getting a wealth tax everywhere you go simply because, well, you got it. What do you care? You got it. No, it's a matter of fairness. That's not the deal. I'll pay what everyone else pays. But to charge me more just because I can afford more, there's a reckoning coming on that. So for now, yeah, I'm going to keep my Ford truck, right? With an administration that supports immigration and thus expanding labor force, do you not think FOMC will struggle to keep the unemployment rate stable even if they were to cut rates? Well, I think when the unemployment rate rises, I think it is a valid question to say, well, why is it rising? Is it rising because people are losing jobs? Or is it rising because the population is growing or the labor force is growing so fast the economy can't create jobs for these people? So you'll get a high unemployment rate even if nothing happens to the economy, just by more people in the labor force saying we would like a job as well. That will tend to put downward pressure on wages, which would be a benefit for the economy as a whole. What you don't want to see is the unemployment rate going up because of job losses, which we do not have at this point in time. In Canada, you can argue that maybe, some months we make it, some months we give it back. But the US is, no, it's all been job gains. Now you'd need, considering a model-driven population gain of 200,000 per month, 2.4 million per year, participation rate of 62.5%, you need about 125,000 jobs a month just to keep the unemployment rate stable. Last month, we had 114, came in below the 125, so that's not really a good thing. But that's still 114,000 more people working than the month before. It's still that many more people working. So I think it matters how the unemployment rate increases. If it increases because immigration really shoots up and you get the labor force increasing, unemployment increasing, you can say, well, we have an unemployment problem. I don't think that's that's really a big deal. What would be a big deal is continuing claims continuing to increase and increase and increase. Now, they have been increasing, but every week they kind of just do this. They're not going off the top of the scale. So you get an immigrant that comes in the country. If they're counted in the labor force, they are unemployed. They don't necessarily have to be on unemployment. So you can get unemployment really high, but continuing claims very, very low, or those on unemployment very low because they never were employed to get unemployment. So I think it's more than just looking at unemployment. The Fed would have a hard time, a brutally hard time, having the economy grow to absorb those jobs with high interest rates, because high interest rates keep down the level of investment. You got to get low interest rates. If you have low interest rates, you'll have more investment. Then yes. Lower interest rates, I guarantee you'd have more home construction. More home construction, more jobs, right? So if you need to get more jobs, you think, well, what can we do to spur economic activity? You lower rates. Do you give career advice? Not really, because I'm so far removed from the job market. I wouldn't know what good advice would be. I think, other than standard advice of, be the best that you can be. That would be it. Do the best work that you can do. I think other than standard advice like that, I don't know that I would be able to give good job advice. Where do you see the price of GM a year from now? I don't know. Higher, I would seem to think, if they continue to buy back shares, which I don't see why they wouldn't continue to do it if the market's not going to do it for them. A significant part of their compensation is tied to the performance of the stock. And even if you made the performance tied to financial performance, they certainly hit their targets. You can't argue with that. Record earnings and raising guidance. Can't argue with that. Increase in their market share in the US. Can't argue with that. And that Corvette, that ZR1, over 1,000 horsepower. Don't underestimate the halo effect of that. That is, the Corvette itself is not a big money maker for GM. Limited production runs on everything. They're not trying to make millions of those cars, but they are profitable. But it's the halo effect of it. That ZR1, 1,085 horsepower, that's better. That's a lot better than some Italian sports cars. Don't underestimate the halo effect of that. That's going to be huge. So you think, well, great, it's a nice car, but they don't make enough of them. It doesn't matter. It's what it does to the rest of their lineup. On that respect, it's just an engineering halo effect. I would be surprised if we don't hear some chatter somewhere in the next year of somebody interested in taking GM out, considering their valuation, of somebody making a run at GM or making an offer, or some talks that there is some offer in there to be taken out, just considering their low valuation. I don't think a Chinese company can get it done, because I doubt the US would allow that to happen. If I can't monitor my portfolio all day, how can I sell puts on IB as the underlying moves? Is there a way to set a limit order? You can. You can look at what the closing prices were, and you can look at the delta, and you can make an assumption. You can say, well, this stock is at $50. The 45 put has a delta of 0.4 with a premium of $1. And if the underlying falls from 50 to 47, I'd probably want to sell a 45 put. That's a $3 move with a delta of 0.4. You can count on at least a $1.20 increase in the price of the put, so to 220. And then gamma might change it slightly. You might put a 225 in. I believe you can also set a sell on the derivative if another price is touched. I think there is an order for that if if X equals 47, then sell this put. Or if this, then that. I think IB allows for that kind of order, so you should be able to get that done. But you can eyeball it with the delta and get close, right? Where can I see the forward price estimate for an option? Well, you can look at the option chain from month to month and then look for the 50 delta. The 50 delta will be the middle of the distribution. For example, I can't see it on the iPad. I have to open up the application. If you look at TLT and go out each month and look for where the 50 delta is, that's roughly where the forward price would be at the 50 delta. If all your puts were exercised, what would be your capital distribution between stocks you originally held and those acquired from the exercised puts? I don't know. I've never actually calculated that. At this point in time, if all of them were put to me, I'm just going to give a wild guess and say I'd probably need $3.5 to $4 million, which I've got. I've got much more than that. As I said, I have a very large cash position. Only because interest rates are so high, it doesn't make a lot of sense to give it up. That's one of the reasons I'm outperforming the externally managed money, simply because I've got the cash return. My externally managed money is underperforming cash. It's not such a great thing, is it? It's underperforming cash. You could have done better just by leaving it in cash. Congratulations on your call on IWM and yes. Off night. I remember writing down that you short IWM 224, and then on Fed Day, I was doing a live session for level 3 exams, and I looked over and I said, just excuse me a minute. And I did a trade right then and there at 228 on IWM. It just didn't feel that small caps should be there, especially IWM. So it just, I could have been wrong, but I got right on that one. Are you saying the Fed can access the job reports before they're released? They said they can. I never said that they can. Powell was asked that if they get an early look at things. He says sometimes we do. That sometimes we will get an early look at a report if it's right after a Fed meeting and we think that the data might affect our decision, we can get an early look at it. He said that. So he said it. I'm not saying that they can, being that he said it. I believe him, right? I always thought the Fed makes their decisions with the same level of information as the public. Yeah, I think that they do, but again, I'm just going on what he said. In the context of what's going on in Venezuela, yeah. Do you believe that there's a chance to get rid of socialism? Well, so, sometimes it's not a matter of who's right. It's a matter of who's willing to use the most violence. I believe, Bitcoin, just alert, Bitcoin down almost 5% to 57,000. I think that's the right thing for Bitcoin to do, because I think it's an imaginary security to begin with. Mexico 19.43 on the peso. Look at the yen. That's why you got the move on the peso. Yen stronger by 0.84, peso weaker by 1.3. I'm afraid to look at futures. Down 70 points on the ES. That's not too bad. Down to 53 on the futures. That would put it down to 52. That's 70 points. If we open there, 52.75 on the index. I think you'd probably get some support around 52 to 52.25. It's going to be an ugly day, people. Or if you got a lot of cash, it's going to be a beautiful day. Look at ZB. If you have TLT, you're going to have a beautiful morning if we open here, up 0.6%. on ZB. That's the futures for the long bond. So if that carries through to stock TLT at, call it $99. Actually, sorry, TLT 98.95. It is trading right now. It's 98.95. So we're all doing well, aren't we? Excellent. That's good to see. SPY is trading right now. If you want to trade in the overnight session, 525.96. 525.96. GM is trading as well. It's not pretty. Actually, sorry, it's not. But 39.55. I didn't think it ended there. That seems odd. 39.55. Well, I'm going to sell more. I'll tell you that much. Yeah, tomorrow's going to be a nice day, I think. Tesla down a 196, down $10, $11. I closed that short way too soon. IWM, where are we there? Let's have a look at where we are on IWM. IJR. IJR wouldn't trade. IWM would. Give me a second here. This is exciting stuff, isn't it? IWM down to 204. Closed that too early as well. Yeah, well, there we are. Wow. We are taking a big dump tonight, huh? Exciting stuff. So context of Venezuela, yeah, he's far more willing to use violence. So sometimes you have to fight fire with fire unless everyone else is willing to use violence, or unless somebody else just as bad is willing to go in and use violence. It is what it is. Now, I find this interesting when you look at stuff like this. You know, you have both Canada and the US with leadership that leans to the left, that's very concerned about political correctness and treating people right and power to the victim. Do they not have a moral obligation to invade Venezuela and throw the government out at this point? If they're concerned about everything they say they're concerned about, if they truly mean what they say, would they not be morally motivated to go into that country? Would they not? But they don't. They don't. They don't go into any of these countries where there is known corruption at the top, where the masses of the people suffer. They do nothing. They do nothing. So you have to wonder, do you really believe in what you say? I don't think so, because they do nothing. They're perfectly willing to watch that kind of suffering go on. Perfectly willing. It doesn't bother them. They sleep well at night. These are bandwagon liberals that only say things when they're reminded when a bandwagon. Oh yeah, I cared about that too. I've always cared about that. Makes me sick. If I had bought a 10K USD 10-year T-bill last week, how much profit would I have now? I don't know. A T-bill? Zero. Well, you'd have the interest rate. You'd have the. Well, how can you buy a 10-year T-bill? I think you mean a note. T-bill is a money market security. A $10,000. Well, I don't know. I don't know. The interest rate changed by 48 basis points. It would have a duration, a 10-year would have a duration of 8.2. 8.2 times half, 4.14%, $410. A gain of $410 plus accrued interest. Any thoughts on GEV or GE? Not really, no. I know they split, but no thoughts on them. At these levels, would you add to your short on IWM? No, I would not. I wouldn't add to my short position there. At this point, given where we are, I'd be looking more for my long positions, not my short positions. I may even be able to close my short position on SPY, or at least sell some significant puts against it. I just thought about that. I'm still short. I'm still short ES. Okay. I don't feel so bad. Okay. Tomorrow is going to be a nice day for selling, I'll tell you that. I got a live session from 11 to 2, so that's going to suck. That's going to suck big time, but oh well. I argue that while we're still adding jobs added are declining, and we will see unemployment rise from fewer jobs added soon enough. Yeah, I still seem to think that that's right. But it's not going to affect aggregate demand. The higher unemployment is not going to affect aggregate demand until you actually lose jobs. But what it will do is accelerate the rate cuts without affecting aggregate demand. That sounds like a good scenario, especially if it leads to lower asset prices where I can buy stuff a lot cheaper. All right, let's make this about me here. What's your views on gold? I think Newmont was a good buy. I was saying so in the 30s. It's what 40s. Gold is now 24 and change. Yeah, it's been paying off. The yield on every ton of gold has been dropping consistently over time. The yield per ton. That if you think about how much gold is left to mine, there isn't as much as the demand going forward for things like jewelry and such, which means to get more gold, to turn more resources into reserves, the price has to go up. It has to go up. So there will come a point where the demand far outstrips the supply, because the production of gold has been decreasing over time. When I say production, I'm talking about the yield, the amount you get per ton. The only way to keep gold production where it is you have to get more tons out of the ground. You have to mill more tons. Many of us are talking about recession. Does the current available data sample is enough to call or predict a recession? You can't predict a recession. You could just say the probability of one seems to have increased. So looking at the data now, would you say that, based on 6 months ago, has the probability increased? It feels like it. It feels like the probabilities increased, but in complex dynamic systems, especially social systems, who knows? It is non-linear and unpredictable. No idea. Can't figure out why CAD apartment REITs didn't come along for the ride. Yeah, I know. Maybe because of earnings next week. Didn't sell off, but they didn't go up. Good time to buy stocks like Apple, Google, Nvidia. Yeah, you're talking about stocks that had gotten, significantly overpriced, especially Amazon, especially Nvidia. No, I don't know that it would be a good time. It depends on what you believe. If you believe this is an overreaction, sure. If you believe this is the start of the hard landing, then no. If you think this is going to be a sort of a more of a tech burst landing like 2002, keep in mind stocks declined for almost 2 years straight. Just every week went down. That you could see the S&P go to 3,000, 2,500. The NASDAQ at that time, I think, lost 80%, 90% of its value. Excuse me. So if when you say, is it a good time to buy? The follow-up question is, well, what do you think is going to happen? And then from there, out we go. Hang on a second. Okay. Do you use any specific tool to manage your margin requirements? No, just eyeball it. Fixed income today, going to start a weekly review from next week. Okay. Not a good week for selling puts. It was a great week for selling puts. Got GT signed. I didn't get any assigned. Planning to hold. Should I take a loss $1 and be done with it? I can't advise you what to do. You have to do what's right for you. I have it. I don't think I was assigned. I didn't get any notice that I was assigned, and I have puts. Let's find out. Where are my transactions here? No, I was not assigned. So I guess there was probably had been some assignments. We're 9/11 now. Mm, I'm okay on it. Um, I want to see where it finds a home, and then from there I'll figure out what I want to do. But you got to do what's right for you. Do you think we'll look back at this July meeting as a policy error? Excuse me. um, well, if the economy falls apart, we'll see it as a policy error. If the market, midweek says, "Hey, we're overreacting," and stops going down and thinks about it and says, "Everything's still fine," and then goes back up and everything is fine and nothing happens till the September meeting, then it'll be like, "Oh, well, it's only an error after. It's not an error at the moment." I believe it was a mistake not to cut rates. So if anything bad happens, yeah, see, you didn't cut rates. But if nothing bad happens, like, well, I guess it wasn't that bad, right? Do you pay for any professional news? Not at this point, no. No, I get plenty already, so I don't read everything I get anyway. So opinion on IWM, well, no opinion at this point. I had an opinion a couple weeks ago, but not now. Do you think selling Euro CAD? I know nothing about the Euro. Giving CAD's downtrend and building a long position SP 500 Canadian dollars via. Yeah. I know nothing about Euro. If you're doing something to generate Canadian dollars, you are going to have a negative euro balance. Well, they are cutting rates though, but I know nothing about the interplay between Euro and CAD without putting the US in there, and I really don't know anything about Euro. Do you pay taxes in Costa Rica for the IB account you manage yourself? No, it's not. No, not in Costa Rica. What amount of capital would you need to sell puts on big cap stocks? No more than you'd need on small cap stocks. It's not based on the size of the company. It's based on the strike price of the stock. So you'd need less capital selling a put on a $20, $200 billion company than you would on a $500, $800 million company. The size of the company does not matter for the margin. It is the amount of money you put at risk. It's based on the strike price. And what about the outside account? Do you pay capital gains tax? No. There's just withholding on income, but no capital gains tax. To know if a stock has high IV compared with the past, do you compare the IV with historic IV? No, not with historic. IV always historic IV. Not. Well, that's what IVP does, right? The implied volatility percentile. So yeah, I do. Any downside on completing CFA at 21? No. Is there a discount on your CFA applied level courses through the year? Yeah. If you have CFA standing, your cost is only $320, not $440. Familiarized with Stoic philosophy? Yeah. What do you think about it? I think it's good advice in a situation. I don't know that it's good advice to live your life by, but I think in some situations it's good advice. To live your life that way, I'm not really sure that I would think it's good advice. I don't know. I don't know that you'll find one thought system where you say, I like everything in this. I think what you need to look at it for is what you find useful for you or what you would find good advice for you. But to live a life of a stoic, I don't know. It's, doesn't sound like something I'd want to do, but there is some good advice. There is some good advice in it. What's your worst business experience? A mistake? Worst business, not investment. Worst business experience. Worst business mistake. I would say getting involved in business with individuals without paying attention to their moral fiber. Uh, um, it happened to me once where I was kind of partners in a business with somebody who I knew lacked moral fiber, and it didn't occur to me at the time. It just wasn't part of my thinking that would be important. I thought, well, they conduct their life in a certain way, but uh, when an individual lacks moral fiber, it's not just for those people; it's for anybody. It's just a matter of time before they do it to you. Well, whatever it is that they do it to you because they're not people of honor. I would say that's probably would be, if I ever started a business with anybody else again, that would be top of list is who is this person? They don't have to be the most qualified or the most intelligent, but they got to be, they have to have a good moral compass. They have to be willing to do the right thing, even if the right thing costs them money. They'd have to be willing to do the right thing, not the right thing for themselves, but the right thing. That's a big thing. It's bigger than you can imagine. Paid off all debt, 108 million in 2 years. Have no debt, 21 million cash. Book value 97 cents. With upgrades to $2. Okay, well, I don't follow little things like that. It's a penny stock, 97 cents. I mean, there's a reason why it's a penny stock, right? Can you go into more detail as to why the yield curve inverts prior to recession? Well, it's not that it inverts prior to recession. It's not like the yield curve knows there's a recession and says, "Okay, guys, let's invert." We see a recession. It is that the inversion distorts the allocation of capital in an economy and the allocation of capital for effective investment that then creates this shortage of growth opportunity, which then causes the recession. So it's the inversion of the curve creates the conditions that invite a recession. It's not as if it inverts in front of a recession. You said duration is a good place to be given the proximity of rate cuts. It's because you expect more cuts than the market has already priced in? No, I just expect more rate cuts to continue. So it would be where I'd want to be. I'm going to grab a beverage here. Give me 1 second because my throat is causing me grief. I'll be right back. All right. For fans of Amazon and the boys, can I offer anyone a Fresca? All right. Thank you for allowing me to do that. Where'd we leave off? Too much fighting on the other side of the world, which all tech overvalue and more selling going to happen in tech. I'm not sure I follow that. Shops in Hull. Oh, okay. Were smashed, looted, and burned in day of protest and unrest in the city that saw at least 3 police officers injured. Okay. What do you think about the idea of some developing economies close their central bank and adopt the U.S. dollar as their currency? Costa Rica basically has, the the US dollar is almost like the de facto currency. Panama, it basically is. So I guess if you adopt the US dollar, what would be the point of a central bank? I mean, what would be the point of it, right? I can see that it wouldn't be very useful, especially if you're a small economy. Um, sure. How do you feel about Amazon? I feel nothing about Amazon. I half like them and I half hate them. I like them because I like AWS. I hate them because you can line six people up all with their own devices and you can go look at the same thing and everyone will have a different price based on their history. I hate that. I hate that. This idea of everybody pays a different price. Everyone should pay the same price, right? But uh, um, what happens is, you get this different price from Amazon, but the supplier gets the same price. If they sell six items, the supplier gets paid six times the same price, but Amazon makes a margin based on what it knows about you. And it'll charge you more than it charges the next person. So I think Amazon has a sickness because of that. Amazon does make it difficult to do certain things. I have Amazon Prime. I pay for it. Suddenly now I have commercials. Oh, you don't want commercials? Pay me more. Why? That wasn't the deal. The deal was I gave you money and you gave me this thing. And it's really not that great, Amazon. If you want to know the truth, your streaming service doesn't have a lot of good stuff. It's one thing that I can let go really easy. So keep pushing me, right? But now I got to pay more. And if I pay more, you know what's going to happen? Oh, this guy prefers this. He likes this. Then suddenly, every time I search for something on Amazon, it'll be 15, 20 cents more than anybody else will pay. Nickel and dime me all the way through. I hate that part of Amazon. And I think, as I said earlier, there's a reckoning coming for companies that do that. And I think it's going to suffer because of that. I think it's not going to be long before you get a vocal group of people on social media that start pointing out these companies and then organize boycotts against these companies. Amazon's the poster child for this shit. Air Canada is right up there as well. If you want to know how bad it can get, try your experiment with six people again, all with different income levels, and I guarantee you the price you pay if you've ever used Air Canada before, or if you're using any kind of device like an Apple device or using Google where they've already tracked information, is selling information to Air Canada so they can set their price, I guarantee you your price will correlate to your income. Bullshit. I don't think it's going to be long before you start seeing this on social media, before that starts to be shared, before you start to get actual boycotts of businesses that actually do that to people. I don't think it's going to be long, and Amazon is a poster child for that. So I just don't want to stay around that. I'm telling you all this before the bandwagon drives by, because once the bandwagon drives by, everyone's going to jump on it and start moralizing like, oh, this is wrong and this is wrong. I'm telling you way now, there's a bandwagon and it's coming by and everyone's going to jump on it. So I would avoid this. Still think of getting 4 rate cuts this year. I think 3. I think a minimum of 3, maybe more, but I think a minimum of 3. I'd like to start thinking independently on macro factors. I'd like to know where you find your expectations for the economic indicators. Go to any economic calendar. Just Google economic calendar. And they will give you what the forecast is for that variable. You'll get it. I don't have to come up with it. It's just listed right on the screen for me to read. What are the growth stocks you like and why? Growth stock. I don't know that I go out for too many growth stocks. I think utilities are growthy, but not growth stocks. If I had to pick a growth stock to invest in, that's a good question. Since I wouldn't know a name because I'm not really a growth investor, I'm more of a value investor. If I had to pick a growth stock, I probably would pick a momentum factor and hope and just assume that growth is coming along with it, because I think it's easier for me to find momentum than growth. Or I would just buy an index with a large growth factor. find an ETF that is like a that is beta and growth, and just buy the ETF. Now I have a portfolio, and from the action on the ETF, I can see the components of the ETF, and I can determine which stocks that I would say, well, let's play around with this one or that one. That's usually how I would find some components to trade. But it's not my style. I'm more of a value investor than a growth investor. I sleep better at night. I can consistently earn more income on the premiums. Yeah, I just kind of like it better. Would you buy January 1725 GM 45 calls? IBKR doesn't allow me level 3 option trading, so I can't sell an option. I reached out to them and their reply was like, nothing specific. Any idea? My portfolio size is 25K. And you can't sell an option with 25K? You should be able to. You should be able to. Unless they just don't like you. Well, maybe it's country specific. I don't know. I'm just I'm making an assumption. Canada, US, you should be able to. I don't know. January 25, 45 call. So for me, if I buy calls, I kind of like to know that I could finance them somehow. So I know I'd want to sell something on something else or on it itself to finance that call. Please walk through the logic behind your Tesla long put trade. You buy a put, you hoping the price goes down. That's the logic. I think Tesla is a $40 stock masquerading as a $200 stock. I think there is no solution for autonomy. I don't think, not in a generalized sense, not in the way that they want to do it, and not with the hardware that they want to use. There is no fleet of robo taxis as soon as they get, if there is a solution, as soon as they get it, because you have to equip all of those cars that he's talking about with new computers and cameras. Well, especially most of those, especially in the US, don't even have it. So there is no fleet. There is no solution to autonomy. There is nothing in October other than pictures and a dream and a thought about what the future could be. And that's it. This is not an AI company. This is not a robotics company. This is a car company with car company margins that will have a car company valuation. This is a car company, according to JD Power, whose quality of vehicle is in the bottom 10, or the bottom from 40 to 50 out of 50 vehicles is in the bottom 10 consistently. So it's not a high quality car company to begin with. On every metric that you can measure Tesla, there's another EV company that exceeds it. So it is not a robo taxi company. It is not an AI company. It is not a robotics company. It is a car company with a neat little energy business growing inside. It should spin that off, right? It should spin that off. I don't know that it is synergistic with Tesla itself, but all of those other things are worth zero. In my mind, they're moonshots that should be valued as venture capital, or at least at a venture capital discount rate, which means discounting those cash flows at 50, 60, 70%, not Tesla's cost of capital. But I think full self-driving is something that that internally they must know that, look, this is not going to work for years. We got to keep the balls in the air for how long? What if we distract them? Like, what if we distract them with something else? What if we throw something else at them to distract them? Like what though? Like what could it be? I don't know. Something different. Like get them to think that we're something else. Uber's doing pretty good. I wonder if we can, like that kind of thing. Uber is in 140 countries. Uber is already working with companies that are working with AV, already doing it. Who's going to be best positioned to have a robotaxi fleet? Uber, because any make or model can be on Uber's platform, and they already have a platform. They already have a customer base. They already are in how many different countries around the world. If there is going to be something, it's Uber who's going to win it, not some company that has nothing going on. So my logic for long puts is that there's still $160 downside to Tesla to get it to $40, right? Warren wanted the money for his Berkshire war chest. It could be. How did you decide to sell puts on 39, 40, 41? Why not at the money? For GM, just eyeballing it. I'm just eyeballing it. When you have that kind of sell off, I don't think it's over, and it's not. I mean, we can see from trading right now, for what is trading right now, SPY down $7, TLT up 53 cents, GM down 215 now, down at $39. So, I'll have to do more work there tomorrow. Ford's under $10. They are trading. COPEX down to 39.79, Freeport 41.50. Things are ugly. Agency, everything is down. Apple down $12. Tesla down, almost down to one under 200. Microsoft down again. IWM 205. I think I would be interested in Facebook at some point if it continues to sell off. Google's still selling off. September copper down 3,407. Yeah, it's ugly. Look at that. Bitcoin 55,000. Bitcoin's basically just falling off a cliff now. They were at 58 a little while ago, then at 57, and now I'm looking again, they're at 55. Money is getting out of risk. So hard to see how this is going to turn around in the middle of the night, 9 o'clock on a Sunday night. But I have seen it before. You go to bed on a Sunday night and futures are red. You think, okay, great. Tomorrow will be a good day for buying. You wake up in the morning and we're up 60 points. It's like, how the hell did that happen? And nothing happened overnight. The only thing that happened was the Americans showed up in the morning. There are no Americans right now. This is the Asian session, and in about 6 hours, we'll have the European session. And then around 6:37 in the morning, when the Americans show up, it's who the hell knows? Who the hell knows what's going to happen? It could continue on or reverse. So you can look all night. You can look at night all you want, but nothing. It doesn't matter till you wake up in the morning. We'll see what happens in the morning. Where are we on time here? We've been at it. We got time. I'll continue where I am here. You said if money printing goes to supply side instead of demand, it's not inflationary. That's true. That means the modern monetary theory works if money goes to the supply side. Well, no, hang on a second now. Hang on. Modern monetary theory is about the amount of debt that a government can issue, and not to worry about it. That's just false. That's a fantasy. That's an idea so stupid only an academic could hold it, right? It's a surefire pathway to ruin. But if you are going to have deficit spending, if you are going to print money and it's going to the supply side, that will not be inflationary if you're increasing supply. I'm not advocating that is a policy that you should follow all the time. I'm just saying that if you find yourself in that situation and it goes to the supply side, you're good. It wouldn't be inflationary. It would increase the supply capacity of the economy. But I don't think that it's a policy that, okay, great, then let's do more of it, because modern monetary theory is this argument here. Minimum wage is $15, or when it was $10. You had lots of economists that made the case that if you raised the minimum wage to $15, it would actually be good for the economy. And you think, well, they do have a higher propensity to spend. They do have a higher velocity of money. It would increase GDP, but at what cost, right? You are going to get inflation. We're seeing this with, McDonald's is a good example, where they had to increase wages, and now they're being criticized for not having anything affordable on their menu. So they are, trying to take steps to fix that now. Their last earnings report wasn't that good. So there are costs to doing that, but most economists would say that raising the minimum wage from 10 to 15 would be beneficial for the economy. Okay. Now here's where modern monetary theory would come in, and I'm using an analogy. I'm not saying that they would say this, but I'm using an analogy to debt. They would say, well, if 15 is good, 20 must be better, and 25 must be even better. Well, why not raise it to 100? If more is better, why stop? Let's raise it to 100, because if going from 10 to 15 is good, going from 15 to 20 must be really good. Going to 25 must be good. If you're making the argument that a higher minimum wage is good, then why not go all the way, right? Clearly, that's a stupid argument to make. That's the equivalent of what modern monetary theory is saying. Well, if this is good, then let's do a whole bunch of it. Well, look, this may be good at that point, and let's let the economy digest that. It may not be the negative everyone thinks, but that doesn't mean that you just keep going because it's good. At some point, it's a negative, right? So in its time, where it's needed, doesn't necessarily have to be seen as a negative. But just because something is not a negative doesn't mean you do more. If you have a headache and you take 2 Tylenols, it's good. Well, then why not take 100? Wouldn't that be better? If 2 are good, wouldn't more be better? Well, that's the stupidity of it, you see? That's modern monetary theory. They would have you OD on Tylenol, arguing that if 2 is good, 4 is even better, 8 must be great, 16 must be golden. Why stop? Take the whole bottle, as long as you don't OD. That's the thing there. That's where they get, as long as you don't, and that's the big thing. No. It is for simple-minded people. It is also for politicians. It gives cover to politicians that want to run deficits by pointing to an academic and say, but these academics say it's perfectly fine. Haven't you listened to these? Don't hate me, hate the academics. They say it's fine. So it gives politicians cover to spend more money. And what would you get as the academic who's pushing this and promoting this? Is maybe you get a government position, maybe you get a head of a council, maybe you get some position of power later on, maybe you get something. So if me helping the Democratic Party out by saying this doesn't matter, go ahead and do anything you want, maybe I get something out of it later on. Maybe I get a lot more visibility. Maybe I write books. Maybe they sell because more people recognize me. Maybe I go on the speaking circuit. Maybe I make money. But in the end, it is somebody telling you to OD on Tylenol because if 2 are good, more must be better. That's MMT in a nutshell. Any thoughts on REITs as they are so discounted? Most paying 6% cash dividend. Is this a new normal or a lower rates environment that would change? Well, I'm in Canadian apartment REITs. They're not paying 6%, but I'm in Canadian apartment REITs. I am nervous about office real estate. I'm nervous about mall real estate. I'd be picking and choosing which ones. Like, I mean, you'd have to hunt for the right underlying. I just wouldn't look at a dividend yield and say, oh, that makes a lot of sense. A lot of Canadian REITs that looked like they were doing okay at 6%, cut their dividend and are still at 6%, but their price is nowhere to be seen, right? And they just they have elevated dividends, the risk is that they cut their dividend again, and still, to still keep the 6%. So I don't know that I would look at 6% as being the thing. It would have to be a REIT by REIT basis. How you calculate the ROI for option to decide if it's a good investment. When you enter in your trade, there's a button that says profile in the options chain. Click on profile, a little window opens up. It tells you how much capital you need. It tells you how much premium you're going to get, how much capital you need, divide the two. And there is your return on invested capital for the number of days that you're holding. What are your thoughts on commodities as a strategic allocation? I would rather be in the companies that have the commodities. I at this point, I like to be paid for taking on risk. That doesn't mean that I wouldn't have some tactically some exposure to it, but as far as a strategic allocation, I don't know that I would keep it as a strategic allocation. I think I would look at it more as a any equity allocation I have to companies, I would consider that as having exposure to the commodity factor as opposed to exposure directly. Trying to find questions that make sense here. What is your opinion on nuclear power? Sentiment for it is growing. Desire for it is growing. And I think if you're going to avoid the inevitable energy wall you're going to hit, if AI and autonomous driving and EVs are going to be the thing that everyone thinks, if you have a global transition to a green grid, you're going to need more power from somewhere. And there's just not enough sun landing in the right places and wind blowing in the right places to solve that problem. There isn't enough geothermal and all of these alternatives to solve that problem. So you would have to embrace it. And some countries will, regardless of what more developed countries care about, some will. Do you think small modular reactor stocks have any value approaching? I just don't know anything about it, right? I think there's an argument to be made, but if I can make the argument, lots of people can make the argument. It's not a question of, do you think that there is some future there? Is it possible to make money given the valuations of what everything is right now, right? So if everything is all priced in, then all you can do is hope that everything works the way that we think it works, such that the fundamentals catch up with the price. There's a difference between a good idea and a good investment. Something that's a good idea may not be a good investment if you're paying for it, if it's all in the price. Question on XLU. XLE got cut off. How do you feel about selling puts on XLE, XLU? XLU, sure. Or even risk reversals. XLU, sure, given their uncorrelated nature and outperformance. XLU, if I think that we have a recession coming up, XLU has a 100% track record of outperforming in a recession. 100% track record. It would be XLU. Fair forward multiple for the market. It depends on growth, right? If we're coming out of a contraction and there's a lot of capacity in the market and unemployment is high and is dropping and interest rates are low, you're going to have significant growth rate coming out of that. There, you don't mind paying a higher multiple. But as the economy grows and starts to, late expansion, starts to level off, where is growth going to come from that you're willing to pay a higher multiple, right? And that means growth in earnings. So usually if you have a thought that the growth in earnings is going to be significant for a while, you're willing to pay a higher multiple. That's usually coming out of an explosion where the economy blew up and there's lots of opportunity for growth. When you're running unemployment at low 4%, interest rates are as high as they are, getting high growth rates at this point to justify a multiple at 21, 22, I don't see it, right? So fair at this point in time, where we are now, under 20, 18, we're at 20.6. That would put us some 600 points lower on the market. That would put us down to 4,700. I think at 47, I'd say, okay, I don't mind being long at 470. At 445 at 17 times, yeah, I'm in. As we go lower, I'm definitely in. But I don't know that we get to 470 on just the data that we've seen so far without seeing more data like this. And if you see more data like this, then yeah, you're probably going to have more aggressive cuts from the Fed. What is the difference between capital accumulation and capital deepening? So capital accumulation is I have 9 tractors, I buy another one. I got 10. That's capital accumulation. I got 9 tractors, I buy one more, I got 10. So now I have 10 workers that have equipment. Capital deepening is I take those 9 tractors, I sell them, and I buy 9 tractors that could do a lot more. That now can drive the field without workers. So now they're more productive because I don't need those 9 workers. So it's capital that is more productive as opposed to more capital. During a market crash, which indicators can you use to know when to start buying in? So you and the rest of the world would like to know that, right? You have some people who draw lines on charts who say, well, let the lines on charts tell you when. And there's a couple indicators that will tell you, well, when we get here, when we get there, Fibonacci this, Elliott wave that, wear a green shirt on a Wednesday, but only if your friend's wearing a yellow tie, that kind of shit, right? Sacrifice a rooster, walk around the house 3 times, then you'll find your indicator. There are some that look at economic data. There's some that look at the market reaction. If the economic data is bad, but the market is not going down, that's a signal that it's time to go in. There's no end to these indicators because none of them have a 100% track record. They all have kind of a mixed track record, but you get some people with a certain style that say, well, these have worked for me generally in the past. Doesn't mean they work all the time, but here's where I felt comfortable. In the end, it's about your investment horizon and your patience. I have a willingness to wait. I have patience. So it wouldn't matter when I bought in because sometime in the next 5 years, this market will be higher. Sometime in the next 10 years, it will be higher. So if I own the broad market, I know at some point in the future, it will be higher. Question is, am I getting paid to wait? So do I have the ability to play the options? And is there a dividend yield? Am I getting paid to wait? If I'm not getting paid to wait, then I have no patience. So holding copper, for example, I'm not getting paid to wait. All I can do is hope for the price to go up. I'm not getting paid to wait, but a copper miner will pay me to wait. And I can double, triple, even quadruple the dividend with the use of options, even low risk. And that income coming in can then buy more of stuff that is at a low price while I wait for the market to recover. I have patience. I don't need it to go up tomorrow. The best opportunities I've ever had is when I'm losing money from my positions because the market is going down and it's giving me a chance to buy more. It's giving me a chance to buy other things that I would have liked to have owned, but I just couldn't justify the valuation. So I don't mind the red because I'm not looking at my portfolio balance every day going, oh, come on, go up. No, I'm looking at certain things and I'm saying, go down. Come on, get to this price. Get to this price for me. You're at 48. Let me see a 46. Can I get a 46? And I'll do this at 46. And I'm way at the bottom looking up saying, come on down, come on down. I'll worry about the portfolio value going up later on. But right now, these are the opportunities. These are the times where I say, okay, now let me see what I can steal from other people. Because tomorrow, if we open up red tomorrow, there'll be weak hands that have to sell. They have to sell. And they're not going to worry about what they sell. And I think what makes this one here a little bit more attractive is you've got a lot of money in passive portfolios, in passive positions, in ETFs, a lot of money that is not going to care what it's selling. It's going to sell the ETF, but everything will go down. All the good stuff will go down with it. You sell SPY, you're selling all sectors of SPY. The good and the bad, they'll all go down. Great. You end up throwing the baby out with the bathwater when you do that, because if you have your watch list of all really good things, you just go ahead. You just go ahead and keep selling, and I will keep buying here. I will keep adding in a strategic way. I'm good with that. You just keep selling. Right. So I don't mind these kind of sell-offs. If you were in your fourth year finance at Brock, wanted to go into asset management, would you enroll in the CFA program to level the playing field against students from top unis? Well, are you any good? What are your grades like? Is there a high probability that recruitment on campus, you can get a job? Nothing beats experience. Or have you got nothing lined up? Right. That's the question you have to ask is what do you have to offer? And in a competition with the other people in your cohort, do you stand out, or are you one of the crowd? Have you done anything to stand out? If not, then you may have to do a little bit more. Share your opinion on product control roll rates team. Product control roll rates team. What the hell is that? In the investment bank, product control roll rates team. I have no idea what the hell that is. In an investment bank, no idea. Is it a dead end? Never heard of it. What is a product control roll rate team? Product control roll rate. Never heard of that. Don't know what that is. Is Tesla the next Intel? I think Tesla's the next BlackBerry. Not Intel. I think Tesla's the next BlackBerry. Like Intel, Tesla may be losing market share by not paying enough attention to its competitors, and it might eventually face the consequences, much like BlackBerry did. I would put Tesla more in line of BlackBerry than I would of Intel. BlackBerry at the time, product cycles were super slow. 2 years, Apple was running loops around them, was on iPhone 3 before BlackBerry decided to even look at them as competition. And then they had these big plans of what they were going to do. This new operating system is going to be the best. No one's going to have anything better. But it was a 2-year lead time. And at the time, I think you can't take 2 years to do something. You can't take this long. And the competition just, well, who owns a BlackBerry now? Who says, hey, you know what? My next phone's a BlackBerry. Maybe there's one out there, but I think Tesla's the next BlackBerry. BlackBerry was on top of the market, and then down they went. Tesla was on top of the market when it came to their space, but everyone's making EVs now. There are, I think, some 50 robo-taxi companies globally, some doing quite well. There are car companies with battery capacity and ranges that put Tesla to shame. Model designs that make Tesla look like your grandmother's car. Yeah, I think it's the next BlackBerry. What was the beginning of the end for BlackBerry was the CEO losing focus on what he was doing and wanting to be an NHL hockey team owner, and everything was focused on that. I think you have a CEO of Tesla that is just as has as much loss of focus with Tesla, and I think he's kind of getting bored with Tesla, or recognizing that most of this stuff that I said I'm seeing slowly is not going to happen. How do I distance myself from this? How do I move away? What do I do? I don't know. If they had a robo-taxi solution that have a robo-taxi, how can you have 50 other companies across the world with robo-taxis on the road and they don't have anything? I mean, it would seem to me that you would at least run it in a geofenced area just for the halo effect, just to show that you have a solution for it. But to do nothing, to have nothing, it's because they have nothing. It's because I don't think that they have anything. Fed concluded monetary policy had no effect on the economy. Do you think they would publicize these beliefs? And would they continue to change rates? Well, I don't think that they're going to conclude that, because I think that they do have an effect on the economy. I just don't think they have the effect that they think they have. I think they have an effect, but nowhere near what it used to be years and years ago. 20, 30, 40 years ago, nowhere near that. And that is the theme of Jackson Hole this year, which we have coming up, is a discussion about the effectiveness of monetary policy. So I think we're going to get a lot out of that. Keep in mind, you've got that coming up. And keep in mind, you have NVIDIA earnings coming up. We've seen how NVIDIA can save the market. It's done it every single quarter, comes out and it saves the market. The AI thing is still going and up it goes. I don't see anything in this last quarter that would suggest that they're not going to make it. Maybe a lack of orders for the current generation chip while they wait for the next generation chip, but that'll show up in guidance big time. So, we have what we have, which I think is an overreaction to the data. Because we had indications that we had a soft economy before this, and the market just didn't care. So we have what we have right now, which I think could turn all around on NVIDIA, and you have Powell coming up in Jackson Hole speaking there. And as you get closer to September, you get closer to the idea of 50. The market's going to start thinking 50, and you're going to, this week, I think you're going to hear a lot more people say, I think this is a good opportunity to come into the market. If you were underweight risk assets, this is a great opportunity. So, it's a Sunday night and we're down 70 points. But like I said, it's hard to tell on a Sunday night what we're going to open at tomorrow. It'd be interesting to see what comes out of Jackson Hole, though. Can you please explain what fixed strike volatility is and how to use it in trading? I'm not quite sure what you're referring to. Well, if you're talking about fixed strike volatility, I can only imagine it means take a strike price and look at volatility over time. It tends to do this. When you have spiked volatility, it tends to drop down over time. So, it depends on, I think that's what you're referring to. How it can be used in trading. Oh, well, I get these questions a lot is, with interest rates high, what would you do? With this like this, what would you do? Well, what you would do is over, because we're already here. So it's not what would you do with implied volatility high. The first question always is, well, what do you think is going to happen? What do you think is going to come next? From that determines what you would do next. Just to say volatility is high, what should I do? I don't know. What do you think is going to happen? Do you think it'll go higher? Do you think it'll go lower? I can't answer the question of what should we do unless you tell me what you think is going to happen. Or at least you have some idea of what's going to happen next, because We don't buy what happened, we buy what's going to happen. One thing that we can count on is spikes in volatility never last long. But spikes in volatility can keep going. They do come down. So if you short volatility, you could go through a lot of pain very quickly before it gets any better, but rarely do spikes stay there. They usually come right back down. Did you go to Brock? First University, yes. First University was Brock, yes. Let's see, where did I leave off? Every now and then, the chat just zooms all the way to the bottom. There it is. Thoughts on the solar space and valuations? I've not followed the solar space at all. I don't know anything about the valuations in that space. Intel cost-cutting program will really help them in turnaround, which they're looking for. Well, that's the first thing you do is cut costs, right? They're doing a lot of things at a time, which might make them turn harder despite a cost-cutting program. Okay. A lot of significant investment in San Juan by BHP and London Mining. What analysis would you do on each in order to decide in which to invest? Oh, you got a significant investment, I'm sure. It's a mining asset. You are years away from cash flow on any of that stuff. I think it would be way too early to start making an assessment on which company I would take. You have CapEx for years if you're building out a mine before it starts producing anything. Years. So this early in the process, I don't think that I'd be looking at anything. What are one or two psychological tools you've learned that help you invest? Psychological tools. I have come to conclude that I don't believe in the wisdom of the crowds. I believe in the stupidity of the crowds. The crowd is usually wrong, and that the market is efficient, but often incorrect. Efficiency just means that whatever information is available finds its way into prices. You have to accept that not everybody has the same interpretation of that information. My interpretation of Tesla's information has been bearish for some time. It does not deserve this valuation, but the market doesn't agree with me. That's the stupidity of the crowd. Is the more the, and I'm going to get criticized for what I'm about to say, the more the average person gets involved in the market, the easier it is to lead them. The more sheep-like the market becomes, so that you find a lot of this mispricing a lot. And it doesn't take long before a group of people can learn that, you know what, we can get them to do stuff. Because so many people are willing to follow what other people say. Roaring Kitty is a good example of look what he was able to do with GameStop this, a little while ago. It didn't hold, but look at the reaction he had. Andrew left Citron Research being charged and sued by the government now for doing just that, using his audience, because so many people were willing to just follow along. And that's why, I mean, you got so many average people coming in that are absolutely willing to outsource their thinking. That is a behavioral aspect of the market. That's not a fundamental aspect of the market. That makes the market wrong more often than the right. Efficient, but wrong. I don't know that that's my behavioral bias, but that's a bias that I see in the market that I can capitalize on if I have patience. because the fundamentals always show up. They always do. What's another one? It's a good question. There are so many out there. I guess the other one is it's hard to ignore some things sometimes, even if you don't believe it. But if a lot of people believe it, because it does become a self-fulfilling prophecy. And I think that a lot of technical analysis, especially in commodities and currencies, becomes a self-fulfilling prophecy because a lot of people believe it. So I don't believe in technical analysis, but I'll still look at a chart just to see what the crazies are looking at. And if I can see something, I know the crazies see it. And if the crazies see it, they'll trade as if that were true. So I don't believe technical analysis works, but I believe it has an influence on people who will then act as if it did work, thereby making it somewhat workable. But when you're trading technically, you're not trading the lines on the charts. You're trading the belief that a lot of people are looking at the lines on the charts. Now, if no one was looking at the lines on the charts, then it's not going to work. But if a lot of people are looking at the lines on the charts, and you can draw lines on charts and say, well, it's just, I can see this, that means everybody can see this. I'll wait till the crazies are done doing what they want to do. I guess that would be the other bias that's out there. How do you sell covered calls on stocks you don't want to give up the position? Then don't sell covered calls. Otherwise, don't get greedy. Sell 10 or 15 delta calls. Don't get greedy. Don't try to get greedy. Even if the 10 delta calls only gives you 21 cents, then okay, it's 21 cents more than you had. It's 21 bucks more than you had on 100 shares. Less the $1.50 it's going to cost you to get it done. Just don't get greedy, right? It's when you get greedy, you start selling 30 delta, 40 delta, 50 delta, then it gets called away from you. Well, now you've lost it. But if you don't want to give it up, either don't sell calls on it, or increase your position by a couple hundred shares by selling puts. Go ahead and sell puts. And if a couple hundred shares are put to you, just say, okay, well, I don't mind those shares being called away. So you have your core position, and then you'll have this dynamic position that you're willing to add and sell calls against. Do that. When you go to Vegas, what's your game of choice? I don't gamble. I've been to Vegas once. Not my kind of town. I think I played. I was younger. I played slots, bar slots. You know, where you're sitting at the bar and there's this. It's like a flat surface, and then the game is underneath. And as long as you're piling quarters into that, your drinks are free. So I got 20 bucks of quarters, and my drinks were free. It would have cost me more than 20 bucks for the drinks. So I thought, 20 bucks for drinks. These machines have a 95% payout, which means if you put 20 bucks in, you should get 19 back. So you can actually, for 20 bucks, if you're just betting like quarters each time, you can actually play for several hours. You can't drink. You can't drink for 20 bucks for several hours. So that's the only time I did it, when I thought, well, if I make it look like I'm gambling, I'll get free drinks. You know, I'd go back to Vegas. I mean, if it's the right group of people, I'd go back to Vegas. I went with a girl, and it was, I didn't enjoy myself. I can say that now because I have no fear of this person listening. I doubt they're listening, but if they are, you were boring. God damn, you were boring. Oh, anyways, that was then. ABR, thoughts on going heavy on financing the 1750 calls with 750 puts? I don't see him going to zero. Neither do I. I don't see him going to zero, but thoughts on going heavy? It's going to take capital. You're going to finance the 1750 calls with 17 puts. What if you don't get to 1750? What if it doesn't get to 750? It'll neither be put to you nor called away. but you spent all the money you make on buying the calls, which means you waited all that time, tied up all that capital, and got no return. So going heavy, yeah, I don't know about going heavy. Putting a small position on just to say, okay, well, let's try this. Yes, diversification. Don't concentrate on one thing. Be diversified. But going heavy, no, I wouldn't go heavy, because it only pays off if it goes up. I know that on this one here. I don't have a sideways payoff. Only if it goes up. So I am looking to add if it pulls back. I don't think it gets to 750, but you get an economy that crashes sometime in August or September because something big happened. Credit market seize up. ABR relies on short-term financing, on a lot on the repo market. They will drop hard and fast, much like anybody else that has a liability side that's dominated by repos. They will drop hard and fast, because the question will be, can they roll over their financing, right? Now, they've always been able to, but still won't change the fear. They will drop fast, and then I will buy. But no, going heavy on a dollar neutral position, if it doesn't pay off, I've underperformed cash. Those who try to time the market, would it be advisable to just buy and hold SPY or attempt to move in and out instead? I wouldn't try to time the market, but I wouldn't ignore time. I wouldn't just say, oh, well, I'm just going to stay where I am. If SPY is trading at 20 times and 21, then 22 times forward earnings, it's at that point where you should say, maybe I should lighten up a bit. Maybe not the full in and out timing the market that way, but certainly rebalancing away from a high valued position into something more lower valued or better valued. Sure. Been holding a position in TLT for months. I closed it out last Thursday. Oh, do you think I should go back long or wait? Well, you're out. The holding a position, when you have options and not using the options, you're giving up a lot, right? You could have made quite a bit on TLT just by holding the option, just by playing the options and holding the position. So yeah, that is, the market can always seem to wait longer than you have patience for. I did this last summer with the AI craze. Market kept going up and up and up and up and up. And I got to the point where I said, okay, I got to close my short position. I've seen this before. This is complete irrationality. I'm not going to play this game. Closed. And the same day, I think the market started going down, and then went down for a couple of weeks. It was like, Jesus, sorry for all you people out there who believe in, fuck's sakes. I thought, like, what bad timing. But I did not go back in and short the market. I just said, you know what, I'm out. It didn't work. Let me move on. I don't know that I would chase the performance. Anyone else sad? Football on Sundays coming back, and market updates also on Sunday. It's right, eh? Sunday night football. I imagine I could move the market update to Saturday. There's nothing stopping me from doing Saturday. It's just I like to think about it for the day. I like to reflect on it for the day. I'm shorting out of the money put options. Should I keep my margins in cash? Or is it a bad idea to have my other stocks as margin? With a market that's weak, I'd sell carefully. Do I get notified before it gets assigned? So 46 GM in September. Well, yeah. Well, you won't get notified before it gets assigned. You'll be notified on assignment. And the short side or the long side of the put has till 8 p.m. that night to issue assignment. So with GM now down to 39, it's past 8, so you're okay. But you run the risk of assignment when the when the time value is so insignificant that you'd rather get between now and expiration, you'd rather get the cash return on the strike price as opposed to wait for the time value. Where are we on GM? 39.25. It's ugly. And they had great earnings. That's the thing. Great earnings, great cash flow. This is, I think, massively overdone. Whew. Freeport. Ouch. Have you seen this one? Oh, that's out of, okay, never mind. It's a price that happened outside. I wonder how that happened. I just saw it at 37.75, down 10% at down $4.22. But the bid and the ask is 39.50, 39.60. A transaction happened outside, and it shouldn't even be trading right now. So I don't know why it's got the 37.75, but it does. But it's wrong. That's wrong. Okay. Whew. I looked at it going, man. Apple down $13. Tesla down to 195 now. I think it's a $40 stock, to be honest with you. I think I've said that. Market's down 750. Futures down 72 points on the futures. And our Bitcoin is at 54,000. Still dropping. 54. Aye. Oh, there you go. There's my market commentary. I should have a show like that where I just read quotes out, Where do you think each individual sector is at in the business cycle and why? I don't know. I'm not going to go through cycle after cycle after sector, 11 sectors and say where they are and why. It takes a lot more thinking than just listing it off. I think we're in the slowdown phase, late expansion, slowdown, even contraction. I think some sectors are in late expansion. I think some are in slowdown, some are in contraction. Quite surprised how we haven't heard much news about defaults, bankruptcies during this economy. Paper printing companies are still alive. Technological innovation to take place. Won't some companies and industries need to get hurt? Some will. That's called creative destruction, where technology will destroy some existing industries. Some of them will disappear. Yeah. Let's see. Going to say you may be entering the FCX trade early, but it sounds like you plan to play options or make money rather than buy and hold. Yeah, I have no problem with that. If it's early and I see pressure, I don't mind selling calls. Right? I'll collect the dividend. I'll sell calls. I have patience. I know how to lower my average cost over time. I know how to work my way out of trouble. I've got patience. I've got skill. I've got time. I'm okay. It's kind of a fun game sometimes to see, okay, I'm underwater by $8 on this. Okay, let's go to work. Let's see, what can I do? And slowly over a couple of months, you're now only underwater by $4. And then a couple of months later, you've broken even, all without the stock going up. I find that to be a fun game. It's a challenge, right? It's I don't mind that. Plus, I don't mind owning it. I'm good with it. Yeah, I'm probably early to it, but I'm usually early to most trades. I usually think about, what I think the future is going to look like, and I say, okay, I want to be in on that future. I'm usually early, but I know that, so I don't try to time it. I know I'm early, so I say, okay, well, I'm going to be early. Let me make sure I have some options to play with. Any upcoming videos for financial sector and applied series? Oh, there's a lot in there, isn't there? 5-part series on understanding banks, 3-part series on the Fed. I think I could put mortgage REITs in there. What else did I put in financials? Where are we here? My videos. Let's find out what else I put in financials. I know that it's the biggest section. There's a lot in there. I could almost spin that out as a separate module on its own, like for somebody who only cared about having access to that. Let's just see what I have in the financials here. Sector studies, financials. Almost 17 hours of video in there. We got the sector study for financials, agency, a walkthrough through agency, 5-part series on understanding banks, a 2-part series on ABR, a 3-part series on the Federal Reserve. That's a lot in financials to understand, especially the 5-part series on banks. I think that covers quite a bit of it. There are other sub-industries. In time, I'll add more, but I just think there are more exciting sub-industries than what's in financials. Not sure about Canada, but in the US, there's margin, portfolio margin. Yes, I have portfolio margin. Based on how you talked about GM trades, it seems like you have portfolio margin. It could be. My margin is based on my portfolio risk, not every single individual position. So maybe my margin requirements for some things are slightly different. I do know that sometimes when I place a trade, if I lower my option count by even 1, my margin changes significantly. Like some reason 50 is huge margin, but 49 is, it's almost nothing. That 1 extra option just changes everything. So sometimes I play around with the numbers just to see if there's a non-linear effect to the margin. Per FINRA, minimum account balance need is 100K. Really? No, I don't think so. I've done it with less than 100K lots of times because I usually have a smaller account that I play in, just smaller little stuff for fun, just as a liquidity account. I've done it in there based on how you talk about the my broker requires 1 to, well, maybe your broker has different levels. Oh, I see. Okay, I get what you're saying. For portfolio margining, you need 100. Yeah, that is the minimum for portfolio margining. You're right. That is the minimum. I thought you meant for selling puts. No, for portfolio margining, that is the minimum. Your broker requires 125. Your broker can have higher requirements, but never lower. Can use margin as opposed. Yeah, you can use margin. I don't use portfolio margin in the courses that I teach. In anything that I show, it's all position margining, not portfolio margining. Jobs are in line when reported in July and weak when reported Friday. What are the odds jobs are in line next report? Well, random, 50-50. Thank you for the level of content in the series. I want to request you please do a sector study on the insurance sector. I've been asked about the insurance sector for a while. Insurance is rather boring. I am eventually going to get to it because it's a big part of financials, insurance, but it's boring. I'll tell you that right now. It's kind of boring. Do you have a loss aversion bias? Not really. I don't have a loss aversion bias. I know how to work my way out of a loss position, so I do. And I've said this before, going from negative 10,000 to 0 is the same as going from 0 to 10,000 somewhere else. It's the same thing. So if I'm negative 10,000 on a position and I can see how I can get to 0, why leave it all and say, okay, well, how can I go from 0 to 10,000 somewhere else? I mean, I'm already here. I already know what to do. No, I don't have a loss aversion. I have a loss dislike. And so does everyone. No one likes losses, but there are times where you say, okay, well, it's time to go. So with Goodyear Tire, for example, I'm going to see how it plays out for the week. But at some point, if I don't see value, if I don't see my way clear on that one, it'll be like, well, okay, let me minimize my loss by seeing what I can do with options, and I'm willing to walk away. But that's one where I'm just not certain that it'll pay out. But it's overall percentage wise of what I have, it's not going to affect me or change anything. How do you manage your loss position? Do you add more? I normally don't recommend adding to losing positions unless your plan was that to begin with. So that, I look at GM and I say I'm gonna sell puts on the way down. I don't know where this thing ends. I'm in a loss position, but I want it. I want it anyways. I don't know where the bottom is. I'm just gonna keep going because I want it anyway. So I'm building. I look at it as I'm building my position, not adding to a losing position. Goodyear, on the other hand, I'm nowhere on it really, so I'm unwilling to sell more puts at this point until I can see something. I think it's a lot of overreaction from the market, but what are you going to do? The price is the price. You got to live with it, right? So I'm unwilling to add there. So I would say, for losses, you're going to lose. If you're in this game, you're going to lose at some point. You're going to have a position that you lose on, period. You better get comfortable with that. You better get comfortable. Nobody, not even Buffett himself, nobody in the history of this game has a 100% track record. You're not going to be the exception. You're not going to be the one. If you want to have a 100% track record, never make a bet. Buy T-bills. You'll never be wrong. Then you can claim to have a 100% track record. But as soon as you take on any kind of risk, guarantee you're never going to have a 100% hit ratio. You're going to be wrong. You're going to be wrong on something. You can't control that. What you can control is your reaction to it. If you're willing to take a loss when it's small, great. Never add to a losing position unless you're trying to own it and the goal was to add more. Unless that was the goal, that you said, look, any weakness on this guy, I'm buying it. And I'll start here. I'll sell one put here and I'm willing to sell 5. Then you stay with your plan if that's what you wanted to do. But if you took a speculative bet on something and it worked against you, don't speculate again. Never add to a losing position. Ever add to a losing position. Unless you really, really know what you're doing and you're comfortable with that level of risk, or you wanted that thing anyways. Other than that, never, ever add to a losing position. Japan crashing. What should we do? World about to disintegrate. Good. Keep thinking that. That's exactly what I want. I want that kind of thinking. I want that kind of sentiment. The world's not going away. The world's not going to disintegrate. Everybody tomorrow that has a job is going to go to work. People are going to stop at Starbucks and restaurants and McDonald's and buy things. Some people are going to head to the mall and buy new clothes. People are going to stop and fill their tank with gas. Some people will buy lottery tickets and off we go. Right now, if I go out to any restaurant in town, I'll find people sitting there. There are delivery cars delivering food to people's homes as we speak right now. We're not, unless you just told me that Israel launched nuclear weapons across the Middle East at major cities and nuclear weapons are going off, and China has just launched their nuclear weapons towards Israel. They're in the air now. The world is not falling apart. It may feel that way. The world is about to disintegrate. No, it's not. The world is about to reprice risk. But we knew it was overvalued. I kept pointing out week after week, look at this forward multiple. It's, and I kept saying, look, the curve has been inverted this long. I can't get past it. I can't get past it. I wanted to take on more beta risk. The only way I could do that is by taking a short on the market to cover the long risk, because if the market dropped, at least that would cover off my long extension. We knew this for a long time. The market was overvalued. It cannot go straight to the moon. It cannot do that. So no, we're not disintegrating. We're simply repricing risk. And it's not a matter of risk repricing. It is also changing psychology and sentiment, which is causing some people to say, get me out at any price, like you're about to do tomorrow morning. Japan is crashing. What should we do? World's about to disintegrate. You probably don't want to be in risky assets tomorrow morning. You're probably thinking, what can I do tonight? You're probably not going to sleep well tonight. Calm down. We're not disintegrating. We've look at the past. We've been through some real bad shit in the past. And where has the market always gone? Higher, higher, higher. The ones who lose are the ones who sell. If you have good quality stocks, yeah, you're going to go through periods where the market does this. You're going to go through periods. If you lose or gain depends on your reaction to what we're doing right now. Just take a deep breath and ask yourself, are you using the right words? Is the market disintegrating? Is Japan crashing? I don't think Japan is crashing. Let's have a look at where Japan is. Well, let's see if we can alleviate some concerns. The yen is up 1%, 156 points. So the yen is stronger. Right away, stronger yen, you're going to have a weaker market, period. It's going to be in line with the currency. So the question is, how long can the currency continue to strengthen in Japan with a 0.1% interest rate? At some point, the carry trade will have unwound. At some point, the currency will be overvalued. At some point, somebody somewhere is going to say, it probably would be worth borrowing in yen right now and investing in the S&P 500 because it's taken such a big hit. Might be worth borrowing in yen and buying the Mexican peso because it's taken such a big hit. Everything doesn't always go in one direction. Let's look at futures. What are we looking for? ND, I think, right? What is the ticker for the US dollar? US dollar Nikkei? NDK? No, NKD? There it is. Dollar denominated yen. Let's look at the futures on this one. We'll look at the continuous. Okay, that is a big drop, down 3%. Forex is down 1%. It's not unreasonable to expect that the Japanese market will be down. It's down more than I thought it would be. That is a big number. But have a look at a longer-term chart of the index. If you go back to October, it was around 30,000, and it ran up to well over 40,000 as the yen depreciated. Right, you're talking about in less than a year, something like a 35% gain on the index. That it would be this nervous is not surprising. 2.91. Look at NASDAQ. E-minis on NASDAQ down 2.35%, down another 437 points. S&P down to 5303 on the futures, down 73 points. These are, I wouldn't say that this is unrealistic. No, I wouldn't say this is unrealistic for a repricing of risk. No one likes to see it. No one likes to go through it, but only by going through it will you get to the point where you have better things to buy. I don't mind this. I don't mind this at all. Why people care so much about Fed announcements is mainly related to how big companies allocate between equities, and no. That you have an underestimation of the influence of the Federal Reserve. It is not mainly related to how big companies allocate between equity and debt. Not at all. It affects mortgage rates, car loans. Interest rates are a reflection of the price of money, and the price of money has gone up. So it affects everybody in the economy, right? Dr. Mark got greedy, no experience. Thought FOMC decision would be the biggest mover on TLT. Sold 88.91, 97.100 iron Condor. Close the 88.91, and why? Why would you close? Why would you close it? Why not just let it go? I mean, you're not going back to 88.91. It seemed that would have been free money. Why would you pay money? Why would you pay money to close free money? I don't get that. Why would you do it? You just lowered the offset to where you're losing the 97-100. Never do that. Never do that. It wouldn't have gone back there. You specifically paid money to get rid of free money. I got a few things I'd like to sell you, by the way. If you want to give me a call later on, I got some real nice things you'd probably be interested in buying. But never do that. Never do that. After the no rate cut decision, I entered that position. Closed it on Friday. I don't know what I would recommend for you to do. If it were me, I never would have closed that side because for me, I would have just looked at it and said, well, it's free. Why would I pay? It didn't improve your margin requirement because the stock can't be both up and down at the same time. So when you set up an iron condor, it's only one leg that really sets your margin requirement. So you paid money to get rid of free money without any decrease in the amount of margin required. I would never have done that. So if you were sitting beside me, I would have slapped your hand very quickly. So what are you doing? Hey, what are you doing? Hey, I would never have done that. As far as the 97-100, at this point, I'd be thinking, I would look at what my delta is. And then if I was worried about it, I would think, well, let me buy the number of shares that I have delta for. The most you can lose on the other side is 300. So it's, I just don't know why you gave up the free money on the other side. I guess I wouldn't be too concerned. The most you can lose is 300. I guess for me, I'd say, okay, well, big deal. Learned my lesson. I won't do that again. And then maybe the market, rethinks what it's doing, and by expiration you have a retracement. But being that the most you can lose is 300 at this point, who cares, right? BSM works for European option. Yeah. What model can we use for American? I think you could probably use the same model. But yeah, you do have option. Well, the options have optionality. The optionality is that they can be exercised at any time. Being that the long side has that, they should be paying more for it. So the American option should be priced a little higher than the European option, but probably not much. Especially the more out of the money you get, I don't think it'd be priced that much higher. What would it care? What would it matter? What you calculated using a BSM model, though? What would it give you? The price is the price. There's nothing you can do about it. Either you accept the price in the market or you don't accept the price in the market. The price is the price. Any thoughts on Oz? Slowly moving my IBR cash to balances to odd. And I think U.S. is going to weaken under Trump. I think U.S. is going to weaken as interest rates come down no matter what. Could flight to safety be a problem short term? Yep, you could. Short term, yeah. Mainly third-party sellers on Amazon setting the prices via repricers. Yeah, Amazon is mostly third-party sellers now. Thoughts on price hikes from Loblaws? I heard what that happened. I heard NDP leader wanted to cap prices for essentials, but can't get along with the thought that this would be good long-term approach. Seems like a quick fix. Price fixes. That's I mean, You don't want to open the door to any of that kind of socialist attitude, especially NDP attitude, because once you accept price fixing, it's not going to be okay. Let's go back. It's going to be, we have price fixing. What's the next step? The next step will seem logical from that step, and then the next step will seem logical from that step, and then the next step will seem logical, and then you'll find out that we're in a completely irrational place from a seemingly series of logical, rational steps that at the time seemed, okay. It's just politicians rarely give back what they start to take. As Reagan said, there is nothing so permanent as a temporary government program. You may need to increase your years of experience trading options in IBKR. Me? I don't think so. IBKR has pre-required capital and experience levels to get permission to trade specific instruments. I had to fudge a few numbers to get permission to trade, right? Yeah, they do ask you questions. Can I buy hats? Please, please, please. This hat is discontinued. It's no longer made. I think we have less than 200 left. There is no hat sale available at this time, and there'll be no more made. But I will be making one for the applied level that has an A on here, probably with the same style of hat, the same look, the same feel, because I love these hats, but with an A on here. I just have to find a supplier. Kathy Wood is probably one of the least skilled investors. Why does she get so much Barron's and Wall Street coverage? Well, because she has a recognizable name, right? But so, yeah, I think she lacks skill. I think she probably destroys more. Well, she has destroyed more value than she's created, I believe. But she would push back and say, "Whoa, whoa, whoa. That's not what I'm trying to do. I've identified a factor that you may or may not want exposure to. It's up to you to decide if you want exposure to this factor. If you get your exposure for this factor anywhere else, you'd perform the same way or even worse. So if you're trying to get exposure to the factor that I'm trying to get exposure to, you may as well invest with me because I'm actively managed and I outperform the factor, even though the factor has sucked for 2 or 3 years. Maybe her argument is I have outperformed the very factor that you would have underperformed if you tried to get exposure to the factor yourself. That could be her pushback. Yeah, that could be her pushback. I don't know. But yeah, I certainly wouldn't put any money in ARC. I certainly wouldn't. You have a 540 put and a short 525 on SPY. With a sudden decrease in SPY and increased VIX, would you consider selling the 540 put and cover the 525 put on a later date with a lower VIX? You're long the 540, short the 525. So you have a spread. Spread is well in the money at this point in time. And you're thinking about taking off the long call and keeping the short put. Well, your margin is going to increase substantially because you're going from a defined risk trade, which is a $15 spread, to an undefined risk trade, which is a short 525 on SPY. No, I would not do that at all. I would not do that. I would leave it right where it is. I would leave that in place. I wouldn't touch that. I would not trade defined risk for undefined risk on the hopes that that it would turn around. What I would do is, as the market drops lower, I'd look to buy a 525 call for 12/20/24. You're going to make a $15 spread less what it cost you. Let's say it costs you $6 to put that on. You're going to make $900, which means you could pay up to $9 for the call. And if the market does turn around, that call will appreciate nicely. And it's an undefined position, meaning you get all the upside, but it's only going to cost you the margin's only going to cost you what the call cost you. I would leave my spread right where it is. And if I really was concerned about a bounce in the market, I would add a 525 call. Yeah, that's the way I would play it. Can you say a word about the guy from Citron and possible market manipulation? Well, the claim did outline some of the things he did, and some of the things he did, if you're going to charge him for market manipulation, you kind of have to charge Kathy Wood for market manipulation as well. You got to charge ARK, because she was telling Tesla shareholders this thing's going to $2,600, yet selling at $250, right? So come on, man. I think that's going to be a hard thing to prove. But I mean, some things were just so wrong that if you're trying to say this was pump and dump, and you look at what he did and the timing of his trades, you would say, wow, that's going to be a tough one. However, like there's one that was pointed out. I think he said, I'm short this thing and I'll be short all the way down to, what is it, $5 or zero. I'm short all the way down, but he wasn't. After a couple of bucks, after he made a couple of bucks, he sold everything. But that the position eventually ended up going down to where he said it was going to go down to anyways, just that he lied by saying he'd stay in it, and he didn't. But he was right anyways, right? So it's like, well, if nobody knew that he got out of his position, and everyone held till it got to where he said it was going to get, nobody lost anything on that. So some of the examples they give aren't really the best examples. I think they're defensible. But the idea that he used his position to make money, duh. I mean, duh. If he were a long-only investor, I don't know that he would be investigated. It would have been a big deal, or that it would have been investigated that much. He's a short seller, so Americans don't like short sellers to begin with. You bet against America, so they don't like that stuff to begin with. But if I had to say, did he use his position without knowing much? Yeah, I mean, yeah, it's a trading tool. It is alpha that you have. It's like, I know how I can outperform the market. I have sheep. I can get the sheep to do things. Yeah, that is a huge asset for a fund manager, is to have sheep. An absolute huge asset. They all do it. What is the difference between Bill Ackman going on CNBC saying, we're selling this thing, it's worth nothing, we're selling this thing, only to find out later he was actually buying it? He just wanted you to think he was selling it so to drive the price down so he could buy it. He was actually buying it. What's the difference there? Using a platform to get the sheep to do things. What's the difference? This is why I say, don't outsource your thinking. Think for yourself, because there are people out there that will do it for that particular reason only. They will pump and pump and pump something, or they'll distort and distort something, and you'll believe them. Maybe they have some success. Maybe they have some notoriety and some fame already. Maybe they were successful before, and you'll think, well, I'll just follow this person. They set up a Twitter account. They know how to reach you right away. They don't have to worry about filing forms with the SEC to get done what they want to get done. Off they go. Early in my CFA journey, when I started putting these videos out some 10 years ago, I had done a one video in Quant about it was right at the end of the probability video, where it was permutations and combinations, and at the very end I drew a picture of a hand on the screen, and I said, there's one counting exercise we haven't done. Yeah, it looked like that. It was my hand. I said, there's one counting exercise we haven't done. And I said, in this industry, you will never bump up against more greasier people than in any other industry. It's the nature of this industry. There's a lot of money in this industry, and there's a lot of greasy people in this industry. So after you shake hands with some of these people, you should 1, 2, 3, 4, 5, count your fingers because you might be missing one. And I said it lightheartedly like that, but it is true. You will, in all the industries out there, other than lawyers, I don't think that you'll bump up against more greasier people, more untrustworthy people, more criminal-like people than in the finance industry. It's a shame, but there's a lot of them here because there is a lot to be made by convincing you to do something, me doing something first, then convincing you should do the same thing, and it only benefits me. There's a lot of fake gurus out there and fake people out there. I got a trading system for you. I got this for you. I got that for you. And it's all bullshit. How many times can you count how many times these companies come along? Things like Raging Bull, and what's this new one now that I pointed out like a couple of months ago, where it's like a cult thing where you get involved and you're on a stock team and you have meetings, and it's all bullshit. I even did a video on this about the coin toss con. All of these things are coin toss cons. They're selling you a bunch of coin tosses that you think that you can win at. This is a greasy industry. I wish it wasn't that way, but it is. And I've asked this question on the Market Outlook before. How do you create a cult for good? Right? All of these cults are about the leader being extremely self-interested and extracting from you, getting you to follow along, and not caring, not having any moral conscience about what you lose or what lives get ruined. How can I create a cult that's the opposite of that? Right? That says that the idea behind the cult is not like I have a system, there's an easy way, but that there is no system and this shit's hard. But the way forward is discipline, process, and education. Discipline, process, and education. I can give you a lot of education. I can tell you what rules you should follow, but you have to develop this yourself. You have to learn and grow on your own. Nobody wants to take that route. That's a long route. A lot of people want to just be told what to do, right? You don't have a lot of people that would then say, I want to know the truth. They don't want that, because truth is a long road to come to truth. They want to be given an answer. Give me answer. Give me answer. Give me answer. Give me answer every day. Give me answer. Well, these are sheep, and if you can addict them to a diet of handed out advice, they will follow you. This is why Tesla has the valuation it has. This is why MicroStrategy has the valuation it has, is because there's a lot of people who just want to be told that it's easy. I have a system. You just have to follow my signals. You'll make money. Listen to me. This is a brutally hard game to play. There are strategies you can follow that will minimize the brutality of the game, but in the end, this is a game of risk. How do you do that? If anyone can figure that out, tell me. How do you create a cult like that? An anti-cult that is a cult, the cult of anti-cult. I don't know. If I could figure it out, I certainly would do it. I certainly would do it, because it would be the right path to follow. And maybe I can stop people from following these things and being a little bit more critical and not really outsourcing your thinking. Now, there are times where I don't mind outsourcing my thinking. If I'm sitting at a table with some very bright people and they're talking about things and they're talking about something, a stock I've never heard of, it's like, oh, okay, well, let me go look at that. But I'd never just straight out buy, but thank you for the idea. Let me look at that. And if it looks good, I'm in. Thank you. Thank you for that. But it's not surprising that somebody used their audience as sheep for their own benefit. That's not surprising at all. I think that's the most damaging thing in this case is uh, um, some of the quotes they have from his communications and his emails and his instant messaging says it blatantly just like that. Says it blatantly just like that. That's the damaging part. It should just be a warning that there are a lot of people out there who do not have your best interests in mind. It's all about them, and it's what you can do for them. Bill Ackman is a big one on that. Bill Ackman, I've seen him on CNBC or heard him on CNBC enough times to know that when he says something, he means the opposite. He's not going to show you his hand. If he's showing you his hand, that's the hand he wants you to see, so you go do something that benefits him. Fuck you. He doesn't care shit about you. It's all about him. Now, you may think, well, then let me be an investor in his fund if he has enough sheep to get things done because he'll make money. You can think that way, sure. If TLT approached 100, should that be a good place to move out for this run-up? I would seem to think that that's what I would do. You don't have a Fed that is cutting at this point in time, and 200 basis points over the next year. I don't think the Fed would agree with that. And I guarantee you with the Fed speak coming up, there's going to be pushback against that because that's going to be the first question. The market is pricing this in. You didn't cut rates. Is that a policy mistake? What do you see? There's going to be pushback against that, and the market is going to react. TLT will come in because of that. Yields will go up because of that, because you'll hear Fed speaker after Fed speaker say, that is not our plan. That is not our base case. That is not what we're doing. Do you get what I'm saying? You have to have them on board to confirm that, yeah, that's probably what's going to happen for there to be another leg up beyond that. But they're not going to do that. They're going to push back against that. So I would seem to think 99, 100, I would say, hey, guys, market, you're pushing them. You've gone a little too far. You know they're going to push back on this. I hear tax reasons too. Okay. I'd like a hat with a blue check mark. A blue as opposed to green? They're not my colors. LW up. Hey guys, is he reading comments from in here or some other chat? I'm reading off the chat. Yes, Michael, let's get traction on this new more hats. Okay, where are we? 306. I'm going to scroll to the bottom. Oh, there's only about 10 questions, and I'm going to read upwards now. Currently, Japan benchmark index falling over 7%. Did it take another leg down? Because it was down 3%. Let's just have a look at what's going on here. Let's hit the futures NDK, 2.18%. Oh, hang on, though. I'm looking at the dollar-denominated yen. Okay, so here's what you can conclude from what you just said. Have a look at what the benchmark is in yen. Have a look at the drop of that. Then have a look at what the dollar-denominated Nikkei is. The difference between that is a result of the currency, which the currency now is, it's not that bad. It's starting to weaken. Bitcoin's still dropping. I can't square that. I can't square the 7% given where the dollar-denominated Nikkei is and where the yen is. I can't. I can multiply them, but I cannot get to 7%. Do you mean 700 points? Because it is down 700 points. 7% I have a hard time getting at. And SPY is now only down 66. It's starting to come back. I'm missing all my opportunities talking to you guys here. All right, a little bit more here. NASDAQ futures down 2.5. Yeah, 2-year yields falling 11. Do you think this is an overreaction? I think it is Sunday night trading. I think it is a spillover from Friday. I think it is very light liquidity and not a lot of information. The information traders won't really be in till 6, 7 o'clock in the morning. You have only one session open right now, which is the Asian session. You'll get more information coming in when Europe opens at 3. You'll get a lot more information at 6, 7, 8 o'clock in the morning when the US traders start getting in and start making decisions. But you have very light reaction right now. Probably no reason to buy right now. Let's see what happens in the morning. It's hard to read anything into a market at night, especially on a Sunday night. I've seen it completely change by the morning. Sometimes it keeps going. Let's see. Do you see fiscal risk affecting TLT? I think fiscal risk is in the background right now, but you're slowly, and I raised this thing months ago saying, I think this is a problem. You're going to hear more about it. And slowly, almost on a daily basis, somebody's talking about the debt. Somebody's talking about the debt. And I think the talk about the debt is not the level of the debt. It's the inability of the politicians to recognize that the debt is a problem. And if you don't recognize something as a problem, you're going to continue on that way. And everyone sort of agrees, Trump administration, Harris administration, debt's just going to increase. So it is at some point going to become a problem. And how it's going to be dealt with, not fiscally, monetarily, is the Fed having to run to the zero line, and the politicians will force them to run to the zero line. They're going to the zero line. So if I had to think about TLT in 5 years, 150, 160, I think. Do you own any Japanese stocks? No, I don't. Do you have a target range for the beta of your overall portfolio? It's well under 1 right now. If you think about the overall portfolio, for the simple reason that I am 75% cash, 75% if you think about the whole portfolio, managed money and my own, take the managed out, look at mine, I'm 75% cash. Still with 8 digits though, but 75% cash. I will probably use quite a bit of that this week. Come on, red. I'm on team red, right? Not team green this week. I'm on team red. So give me something here. Give me something. I've got a lot that I want to get done, and we'll see what happens. When market opens, just click sell immediately. Yes, tell all your friends to do that. Yes, and I'll step in around 10:30. Okay, a couple more and we'll be done. Do the silver market. I don't think I need to do the silver market. I've done copper and I've done gold. To understand silver mining, it's just a different leaching technique. It's a different chemical that they use, but the whole process of resources versus reserves, reserve prices, understanding the balance sheet, understanding yield, it's the same thing. It's just a different mineral. It's the same thing. So I don't know that I would have to do a silver miner. If you understand copper mining and you understand gold mining, you understand almost all mining. It's just a different mineral. It would have a different leaching process or a different milling process, but it's just a different mineral. So I don't know that I need to actually do that. At some point, I may. But I'm one person. I am one person. So thoughts on Tom Lee's small cap prediction. Tom Lee doesn't make predictions to be right. Tom Lee makes predictions to be at the top of the list, because no one's going to remember that he was wrong. They're just going to remember his name. No one's going to remember that he's wrong. It is all about marketing. Small cap's going to go up 40%. Inflation going to go to 0. I mean, some of the calls that he makes, if you say, well, let's go through all the calls he's made in the last year. He's well under 50% on his hit ratio of being correct. You'd never invest in a manager like that, but that's not what he's doing it for. That's not what those things are for. They're there for visibility. You want to be at the top of the list for visibility. What are they going to remember? They're going to remember his name, and they're going to remember that he was bullish. And at some point, these things are going to go up. And at some point when they go up, you're going to say, that guy was right all along, wasn't he? He was always right, because he's playing the side that tends to go up. 70% of the time stocks go up, 30% they go down. So let's play the visibility game. Let me make these outrageous calls. No one's going to remember the call, but they will remember my name, and they will remember I was bullish and the market went up, and they'll look back and they say, this guy really knows his shit, right? That's all it is. It's marketing. It's marketing. That's why he wants it public. That's why he's on CNBC all the time, because you have to be. That's why he does all of these shows, because you have to be public out there. You want your name out there. You want to be a perma bull, because years from now, no one will remember your predictions. They'll just remember you were bullish, and years from now, the market will be higher, and everyone will say, I should have put my money with that guy. Do you get it? That's all it is. That's all it is. His predictions are not his firm beliefs. His predictions are marketing driven. If they are his firm belief, how the hell's this guy got money under management? How the hell is he keeping money under management? His investors from time to time will say, you're not that good at what you do. I mean, you were wrong on this, you were wrong on that, you were wrong on this. But over long periods of time, he's going to be right, because he says things are going up. So if you say, give me a price target for all the indices, I'll say 30% higher, 30% higher, because at some point they will be 30% higher, and I will be right. Oh, the path there? Oh, well, you didn't ask me about the path. You just asked me what my price targets were, 30% higher. I will be right. Now, if I wanted to, I could use whatever reputation I currently have right now. I could work my way onto other channels, eventually work my way into different spaces, and just have my name everywhere as this big perma bull, and everyone would recognize my name. And over the long term, I would be right. I would be right. But all I'm doing is playing your short memory and marketing, right? That's all that is. I can't believe that his calls are serious, because some of his calls are just absolutely ridiculous. You listen to me go, Tom Lee's bullish. What else is new? What else is new? Interest rates going up, he's bullish. Interest rates going sideways, he's bullish. Interest rates going down, he's bullish. Jobs being added, he's bullish. Jobs, unemployment going up, he's bullish. It doesn't really matter. Flip a coin. Bullish, heads, tails, he's bullish. Heads, he's bullish. Tails, he's bullish. He's bullish. Right? So if you're going to be bullish all the time, you may as well be seen. You may as well put your name at the top of every list and have ridiculous forecasts, just so you are on the top of the list. You don't want to be in the middle of the group where your name gets blended in with every other name. You want to stand out. That's what he's doing. It's not a bad marketing technique. You can't fault him for that. But much like Kathy Wood's predictions on Tesla, they're not real. They're for you. That's marketing. They're playing the market, and they're not really serious about what they're saying. Would you sell more GM puts until you hit 10% excess liquidity? No. Until I hit 10% excess liquidity? No. I'm getting nowhere near that line. No. If I'm at 10% excess liquidity, something has gone terribly wrong. No way. What is your plan if GM opens tomorrow around 39? Sell more puts. Sell more puts. Sell more puts. I got no problem. All right. What circumstances will ABR drop below 11? Would it be bad inflation? Nope. Good jobs report multiple times? Nope. It would, for ABR to really drop, well, below 11 is not really a far cry from where we are. It could go down to under 11 just on market sentiment. It could do that just because market sentiment is so negative. We have selling into this week, Monday, Tuesday, Wednesday. By the way, if you do have a Monday sell and a Tuesday sell and Wednesday start to sell, a 3-day reversal is very common. A lot of people believe in that sometime Wednesday afternoon, you'd want to bet on a reversal and a rally if we have Monday, Tuesday, Wednesday selling. 3rd-day reversal is very, very common, or at least it's a commonly held belief. So we could get under 11. That's nothing. What would bring it under 8, under 7, under 6 is something drying up in the repo market. Is liquidity drying up. But if that happened, the Fed would flood the market with it. It would flood the market with that, so that's not going to happen because the Fed would just step in right away if something that bad happened. All right, 10:34. I'm going to, have some me time right now. Let's see if this still works. There it is. And let's get some lasers going in there. There's the laser show. Look at that. Isn't that incredible? All right. I'll I'll see you. I'll see you next week. Have a safe time out there. And if you don't know what you're doing, sit on your hands. Don't be a hero. Sit on your hands if you don't know what you're doing. If your positions are down, they'll come back. If they're good stocks, they'll come back. Just without the cough at the end, but calm down. See you next week.